So on Friday, it actually was read on the day pretty early, right? But what made me think about it was we were starting to look at call credit spreads. I mean, so put credit spreads, call credit spreads. But I had made a statement earlier about um like trading back into time frame continuity. I was saying, I think I had made a statement like prior to that, that was something like if you're looking to trade, um if you're watching this bounce, I think I said something earlier than like that. If you were looking at the bounce, if you're looking to enter again, wait till it bounces and then enter back in the time frame continuity. And I don't even remember what time I said that, but it had to be in the morning. I was like, okay, if you're looking to trade this, wait till you get the bounce and then it goes back in the time frame continuity. Because with it being read on the day, and we started to have, and it might have been in this window, we started to have this reversal, or what looked like it could possibly have been a reversal, right? So you had a failed two down right here. We like failed two downs. Let me turn VWAP back on so that way we would know, because we use VWAP as an entry place, right? So I wanted to say, okay, if you were, let me turn off the moving average so that doesn't like get in our way. So I was saying, okay, if you're looking to maybe enter again, once we got this upwards move, and actually it could have worked even here. Once you got the upward move back into here, then wait until it reject off of VWAP to then trade back into time frame continuity, which was still down. So once you have you're in on a red day, which we were on Friday, right? As long as we're in a red day, we should be trading with that continuity. And I don't really talk about that. And it really like was highlighted to me again, Wednesday, Thursday, somewhere in there, just trading into or staying into time frame continuity. Cause we're cool on, I'm big on looking at reversals because I like trading reversals, but sometimes I'll be wanting to trade reversals, but the reversal is going opposite of time frame continuity. And then we're wondering why it goes up a little bit and then turns back around. And that's because the overall day was red. So the daily is red, and we did have some bounces along the day, right? So we bounced here, right? We bounced again here. There was a bounce even here, but the overall day was red. So because it's red on the day, we should, even if we do have some bounces, if you're going to trade put credit spreads on a red day or call credit spreads on a green day, then you need to, not you, we need to be trading them shorter term. So to say, okay, if I'm going to get into a put credit spread going with something like this, as it goes back up, I need to be planning to get like a little bit of money. And as soon as it rejects off VWAP, I need to exit, right? Because you're going against time frame continuity, which at the time if you were looking at our time frame continuity at the time on the 5 minute, 10 minute, 15, that kind of thing, we would know that everything else was red, even though there was, some momentary green. Even if we did it here, like you said, okay, this is a momentary bit of green, but we want to see what does it do when it gets back up to coming into VWAP. So you're looking to see, okay, I'm only going to ride this bullish move for a little while. And then when you see a rejection, which we see here, that needs to be your exit place. Maybe I'm going to exit here. Turns out there was another one that went a little bit higher. But if you're going to trade opposite of time frame continuity, then we need to be trading it with short-term plans in mind if the day is something opposite. Did that make sense? That was a long answer to your short question, but did that make sense?
Yes. Thank you.
You're welcome. You're welcome. Unless we get to like, when we do see that here, when we finally got a really good reversal, because down here we did see that we got a reversal, and then we did a PCS under here under this pivot, and that put credit spread held us all day. Of course, we're cool with getting underneath a low, which we do see a good reversal. This was a good one here where it's really going to reverse, and we can just get a put credit spread under here and stay with it, which is what we did, because this is a clear That's a good reversal there for the day. It was a good reversal.
Yeah,
We're
Friday.
going to talk about that a little bit when we do our strategy too. What was that?
Yeah, Friday was a good fake out because I think we gapped up. Did we not?
Yes, we did.
Did. And that
Hmm.
was like, oh,
Yep,
ooh,
yep,
okay.
yep. We
Because
did.
your
Hmm.
girl don't try to get into PCSs first. So I
Yeah.
actually had one, and I
We
think
filled the gap.
it was I don't know, 56 60 something, 60 something.
Hmm.
And I was like, come on now, you need to be below. So, and that's why I had, I think, 45,
Hmm.
because I think the line was really 43-ish. So I was like, all right.
Hmm.
When I saw it drop that first, I was like, get out. So it just, I saw it by the corner of my eye and it fell. And I was like, boom, get out of that. So we got out of
Yeah,
that. But I didn't think we would go much lower
yeah,
because 43 and 60, you got 20. I'm like, I genuinely wish I got out of that first. I mean,
yeah,
both of them. I only got out of
yeah,
one.
yeah.
Yeah, it was definitely a red day.
Yeah, definitely a red day. We're going to talk about that too. We're going to talk all these things. We're going to talk about some of these things and how we pull the trigger, because that's one of the things that for I strongly believe, not just for us, but for me specifically, that that's going to make or break us in 2026. How quick we exit stuff that we see, that we know we need to be going. We just need to exit, because we also know that we've got the skills to make the money back. But if we wait too long, then we get too red, and we get too red. So if we wait too long to exit and we draw down $200 and $300, then that takes us too many trades to make up that money. But if, like, for example, if you were at 45, as soon as it got to where it was anywhere near like looking like it was going to be 45, if you had dipped, you'd be like, okay, I'm out. And then you would not have had to worry about whether or not it was going to recover. It did, but you spent a majority of the day worrying with it, right? So that's going to make a difference for us this year, for sure. For sure. All right. I'm going to go ahead and get started, because I think a lot of the questions that we are going to have, we're going to cover in our strategy. And I know I'm going to cover a lot of territory, and we're collectively going to learn so much today that I know it's going to be beneficial to all of us. I'm going to run our entire strategy start to finish. I'm going to put it all together in one place, because I feel like as people have joined us, the people have watched videos and they picked up bits and pieces. But I know if y'all are like me, and many of you are, we'll watch a video piecemeal and part and pieces and pit and parcel based on what I need at the time. But most of us don't watch all the way through and get a full learning. And so there's bits and pieces that we miss, and that'll tell on us at the time that we need it most. So we're going to save ourselves by watching the entire thing. I'm recording this so that way we'll get everything we need. I'm going to ask you to do me a favor though. If you've got questions along the way, I'm going to ask that you put the questions into the chat, right? I can see the chat. I can see the questions that you're asking, and I can build them into the discussion that I'm having. And the questions you have, I'm probably going to answer them, but I'm going to ask that you put the questions in the chat. So I want to record this, and I want to be able to record it like for future use for people who are future students. So I want to be able to kind of keep it just a good teaching without a lot of questions in the middle, but I can build the answers in easier if I can just talk it in. And then when I get to the end, if I haven't answered your questions, I am going to have a space where there will be questions and answers. And I'm going to also have like some exercises at the end, like some back testing. We're going to look at some of the stuff exactly at the end of this. Okay. So if y'all will do me that favor, I will appreciate it. All right. All right. All right. Everybody can see my screen, I believe. Let's rock. Let's rock on. Okay. Try to do me a favor. Keep your mic locked. I do have Janae here helping me. So between the two of us, we will answer the questions that we have. Either I'll build it in words, or we'll type something in the chat. Okay. But we will make sure all your questions will get answered. Just know we won't leave you hanging. Okay, we're going to run through. Okay, here we go. So the option seller zone, trading SPX 0 DTE full strategy, pre-market prep, entry criteria, exit criteria, indicators, how do we manage the trade in the meantime, and risk management along with exercises. Today, of course, is January the 4th, 2026. We're running it starting at the beginning of this year so we can prep ourselves and be fully ready for what 2026 has to offer us. I just know that risk management for us is a big thing. And once we really get that as our final frontier, I believe 2026 is going to be the year that we flip the switch and this really becomes the thing we do. All right. We got an elusive 6 figures. It will not elude us after this year. I promise. I promise. Okay. I'm glad to have y'all here in the membership. Some of you are new, many of you are not, but we're definitely here. This is, as you know, a very supportive community of traders, and we're all looking to grow our money consistently without having to watch our screens every day, all day, unless you choose to. But there's strategies that we have that you can use that you don't have to watch your charts all day long if you don't want to. Y'all kind of know who I am. I'm a mechanical engineer. I'm an author. I'm a math professor. I'm a stock options trader. I'm the founder of Educator to Trader. I'm a content creator. I'm a wife. I'm a mommy. I'm a grandmommy. I'm a great grandmommy. I'm all these things. Basically, my job here is to help empower the people to just generate resources from the stock market. I know there's gold in there, and I think we can get at some of it, right? We're going to stay green and we're going to get some of this money, right? I'm not soliciting anybody to do any particular options contract. I'm not giving I'm not giving financial advice. I'm not a financial advisor. The stock market is not easy to predict. You will take losses. I have taken more losses than I like to admit, but I've lost money here and I've made money here. The goal is to win more than we lose. I'm not responsible for anybody's losses or their wins, to be honest. Everybody takes full responsibility for themselves. Our agenda today, we're going to talk about the pre-market stuff, entry criteria, trade management, exit criteria, risk management, and we're going to do some examples. Okay. First thing I want to make sure that we're clear on is charting is imperative. All right. If you deciding you're going to trade SPX, but you don't want to chart, please go find something else to do. Because if you don't want to chart SPX, but you want to trade SPX, you might as well just send your money to me, because you're going to just be handing it to the market. You might be successful a little bit, but please plan to chart. Okay. I have found that charting ES futures is best and then trading on SPX. And the reason is because SPX only trades during the day. It trades from 9:30 to 4, right? But ES futures trade all night. SPX follows ES. But while ES is still moving through the night in the futures, it's on the weekend, all that stuff, there's still price action that is being formed when SPX is closed. And sometimes we get to SPX in the daytime and it's doing something, like it's getting stuck someplace and not moving up, or it's going down again. So we're like, why is it not moving from here? And it turns out that ES maybe has a previous month high, or it's got a fair value gap on ES that is stopping it. But we don't see that on SPX because SPX didn't have that fair value gap because it didn't have that same price action. If you chart on ES or keep it up, keep it running, you're going to be able to see that there's things happening in the ES futures that are going to inform what happens on SPX. Okay, so chart on ES, trade on SPX. Now, if you don't necessarily want to do the charting, you can put indicators on ES that will help give you some guidance. That means you need to have probably a higher subscription of TradingView that will give you the ability to have more indicators. All right. So we'll talk about that when we get there, but either you chart it like support, resistance, gaps, all the things that we do for charting. And I've taught all these things: support, resistance, gaps, previous day high, previous week high, those kind of things. You can chart all those things on ES. And then trade on SPX. The connection between SPX and VIX is this. The VIX is the volatility index. It basically just tells us how volatile is the market at the time. So if things are happening like FOMC days are going to have maybe higher volatility, or times of war are going to have higher volatility, inflationary things. So events are going to make the VIX be higher. Generally, when the VIX is up higher, the market is lower, it's going down. And when the VIX is low, like over the past few weeks, the VIX has been in the 14s, 15s. The VIX being low generally means the market is climbing, or it's more bullish. Of course, last week the market did have a pullback, but the market is higher now than it was a month ago, 2 months ago, when the VIX was in the 18s and the 19s. So there's usually an inverse correlation between the VIX and SPX. So before the market opens, you want to look at the VIX just to really see where it is. There's nothing really to do, but just know that if the VIX is in the 14s, 15s, then that means the market is probably in a bullish form. It's really a piece of information to know. If the VIX is in the 19s, 20s, then that means there's probably a little more bearishness happening in SPX, okay? We look at Forex Factory every day. The same things I look at if you're on my call in the morning. I look at Forex Factory to see what kind of data is being released today. What are there red folders? Are we having some kind of bond auction? Are FOMC people? I really don't do too much with the people talking unless it's Powell talking. If there's a red folder with FOMC, is PMI coming out, CPI, PPI, like what kind of stuff is happening today for data? Is certain earnings are going to cause, the market to move. You really are looking at what things are going to move SPX, which SPX is comprised of the 500 stocks. Of course, it's heavily weighted by things like NVIDIA, Microsoft, Amazon. So you might want to look at the top 10 holdings of SPX, because whatever moves them is going to move SPX. All right. So that's where we use Forex Factory. We use Adam's numbers. Adam Mancini 4 is on Twitter or on X. We use his numbers to help give us levels and give us guidance. If you're one who wants to pay for the newsletter, you can. I think his newsletter is like $150 a month or something like that. But, you can also just use his tweets. That's sufficient. I feel like for me, it's sufficient. I used to pay for the newsletter. I don't anymore. I still have access to it, but it's a lot. He goes way, way more into depth. I think if I traded futures, I probably would, but I don't trade futures. All right. So, but his newsletter is definitely in depth. Does charting always happen the day of trading? Is there any pre-work that can be done before the market open? I would suggest you chart you can chart after the market closes, or you can chart in the morning. I think it's good to see in the morning before the market opens, what has the market done overnight? What has the ES done overnight? Right? What has it done? I have an indicator that looks at the pre-market on ES, so I don't necessarily have to go looking too closely at that myself. I can see it. It's already like there's an indicator that shows the pre-market high, pre-market low, previous. It kind of does all the work for you. So that saves a lot of that for you, right? Adam gives the difference between ES. He does not give that difference. I do that difference, right? Adam doesn't give the difference between ES and SPX. I go to the chart every morning I take SPX 500 and ES, and I subtract them, and then I do those numbers. Adam doesn't give that. Adam gives you ES numbers. I translate those to SPX. All righty. Gamma exposure. So we also use gamma exposure, and we'll talk about that. There's one Discord where you can call Bear Trap, where you can see gamma exposure before the market opens, and I'll show that to you. That Bear Trap is actually free, so you can go there and get gamma exposure information for free any time of the day or night. Actually, you can do it anytime, or you can get it from Magic 8 Ball, which we use it during the day from Magic 8 Ball. For SPX Bear Trap, you can get it for any ticker you want. Magic 8 Ball, we only see it for SPX. So, and Magic 8 Ball has a cost associated with it, but this is something I look at ahead of time, right? Lillian asks, what is the indicator name for the pre-market ES information? I'll make sure we get to that. All right, I'll get to that, Miss Lillian. Okay, so these are the things I look at ahead of time before the market opens. Right, these are the things that we look at before market opens. All right. Okay. So this is the gamma exposure that I get from Bear Trap. I'm going to grab this link out of here. I'll grab this link and put it into, let me see if I can, there we go. This is a free Discord called Bear Trap. I'm going to put it into the comments here. So that way, where'd the comments go? Where's the comments? Chat. Oh, there we go. This is a free Discord. I'm not sure people are into Discords, but I will take us to the Discord and show you quickly where to see it. All right. When I'm here, this is Magic 8 Ball. Bear Trap is BT. It looks like the Bear Trap Discord. Under GexBot, here, you go where the message is, you put exclamation point GEX space SPX. Now you can put any ticker you want here. GEX space SPX, and then it's going to calculate the gamma exposure for you for that particular ticker, and it brings this up. Now, when it brings this data up, there's information on this chart that you can gather. You've got max pain, spot price. I'm going to tell you what these things are in a minute. The volatility trigger, the call wall. There's a put wall here, and this is called something else here. I'll tell you in a minute. But it has the stock price. This is all based on open interest for January the 5th, which is for tomorrow. Okay, just for tomorrow. All this is here. Now this is, you got red bars to the right, which is put stuff, and you got the green bars to the right, which is call stuff. This can be found any time of the day or night. I'll look at this before the market opens to kind of see where is spot prices, like current price, but where's the call wall? You know, call wall here, it says it's 68.50. Where is the put wall? The put wall is looks like the call wall and the put wall are about in the same place, which is weird that the call wall and the put wall are on the same line. And then the volatility trigger, which is basically where stuff can just start to get really wonky. Anyway, I'll go to the screen. That's all in Bear Trap, which is a free Discord. Like I said, there's other stuff in here too. I don't use any of the other stuff in here except for the GexBot. That's all I use is GexBot in here. All right. But anyway, here we go. So the call wall is the largest open interest. It's called the call wall. The put wall is the largest open interest for puts. Of course, the call wall is for calls. The put wall is the largest open interest for puts. The major wall is here, the largest concentration of gamma. You got a spot price, which is current price. Max pain is the price where option buyers lose the most money at expiration. I thought that was very interesting. Max pain is actually right here at 68.90. On this particular chart. It's the price where option buyers lose the most money at expiration. Now, option buyers, that ain't us. We're option sellers, but max pain is there. Volatility trigger is a place where dealer gamma flips, right? That's what it says down there. Place where dealer gamma flips is the volatility trigger. That's like our when we're looking at our other gamma flow chart, it's like the flip zone, basically, when we're looking at our other chart. Now, one thing you can always do for those of you who are starting to use ChatGPT, which many people use, I think is very wise, you can always take a chart like this and put this in ChatGPT and ask ChatGPT to explain it to you and say, okay, what does this say for today? What does this say about today? And let ChatGPT give you some information to help you understand this kind of stuff, right? This is the things that you use that kind of technology to help you trade, right? It's ChatGPT is not going to tell you, oh, go here and trade, 69.20 call credit spreads. It's not going to do that because it's just not. But it can explain a chart to you. It can help explain things like this that seem confusing. Like, what is this saying? There's a whole lot of red here and not a whole lot of green. Let you know that there's a lot more put action than there is call action, which, you can figure out. There's a lot more red than green. That probably means I probably should be doing call credit spreads versus put credit spreads, right? So then then you're going to say, okay, now where should I do? You're using your knowledge to say, where should I do my call credit spreads? Maybe above the call wall or above my put wall, that kind of things, right? So this is gamma exposure, something I look at before the market opens. But then once market opens, we start using Magic 8 Ball. I start using Magic 8 Ball. Okay. Thank you for Bear Trap. You're welcome. Pastor Will, I didn't know you didn't know about Bear Trap. I thought you knew about that, but there's the link to that. Okay. Okay. Moving forward, trade entry criteria. Trade entry criteria. If you got questions, be sure to put them into the chat so I can build them in. We've got some entry criteria that we use, and we've narrowed down what is the criteria that we use for entry. We used to be where if we felt like we were entering a trade, we would just enter all random and willy-nilly, right? Where we grew from that. We grew. Okay. Delisha says, why would we want to do more call credit spreads and not put credit spreads on the bear trap? Well, if you've got more red stuff, if you've got more puts or more red stuff on the side, that means that the price is probably going down. So you want more call credit spreads because the price is probably going down, right? So if you got more red on there, you want call credit spreads on top of that. All right. That's why you would want to do more call credit spreads on that particular picture. Okay. Trades entry criteria. Okay, so one of the ones we use a lot, you're welcome, is opening range breakout. Now, I'm a fan of the 30-minute or the 1 hour. We do have some people who use the 15-minute, and I do see benefit and value in the 15 minutes when they use it. But I also see sometimes that a 15-minute could possibly shake you out or kind of fake you out. It really comes down to the individual. Sometimes I will enter based on a 15-minute. If I see a good, strong entry on 15 minutes, sometimes I will enter on 15. But most times I'd rather ride with a 30-minute entry criteria so we don't get shaken out. And the 1 hour is good too. But now 1 hour is sometimes hard. Ooh, it's sometimes so hard to wait for that 1 hour candle to get done. You're like, 1 hour, I'm just gonna be here all day. Of course, 1 hour is literally only 10:30, but it feels like it's forever. Okay, opening range breakout, one of our entry criteria. Second break of the opening range, which means it may break out of the opening range going one way or whichever, and then it may not stay out, but then it will break out again the same direction or another direction, and you take the second break because the first break may be the fake, right? That's another criteria that you could use for entry. Confirmed reversals. Confirmed reversals. Use a 30-minute or higher time frame. So sometimes, like I showed y'all on that chart, price was going down. We did see some reversals. One of those reversals was kind of a fake out, right? The other one was actually a good reversal, right? We were looking here. These look like they were reversals. Right? This looked like it was going to be a reversal. It did it move. And then what happened? It came right back down. This looked like it was a good reversal. This, and you know, it passed by the reversal candle, went up a little bit. That's all it did. And came right back down a little bit lower, actually, than it had previously been. Really, the confirmed reversal was this one. But we had two seemingly, fake reversals back here. We'd have chopped in, hopped in over here. And then this dropped somewhere. You'd be like, no. It turned out your trade over here still would have been fine. If you did PCSs based on this, but these weren't really confirmed reversals over here. This one here, a 3-2, 3 down, 2 up. This is really the reversal. All right, this is the confirmed reversal. So you want to make sure that you're getting in on a confirmed reversal. Stay on the higher time frames. Watch, don't let yourself get faked out, because sometimes we get the reversal and we go to a lower time frame, and then before you know it, it don't pull back. And you're like, but what? It looked like it was. No, if you entering on one time frame, then stick with that time frame to confirm it. Now I'm gonna change that a little bit, because one of the things we do is on the opening range breakout, if it breaks out on a time frame, we do drop to a lower time frame to make sure that the candles are staying outside of that of the opening range. I think you should do that. That's confirming that it really is out of the opening range, right? So, but I don't want you, if you're entering a trade based on a time frame, right? I want you to make sure that you're sticking with that time frame. Okay, that's really a better way to do that. Stick with the time frame that you're working with. Okay, all right. Confirm reversal or bounce off of VWAP. That's a confirmed reversal or a bounce off of VWAP. Like in the case of this, this is a bounce off of VWAP over here. If you were saying, okay, I believe we're doing call credit spreads, right? I'm doing call credit spreads. This price bounced, but then it rejected off of VWAP. This is a VWAP rejection. You could say this is another call credit spread entry. This is a rejection off of VWAP. So you do another call credit spread reversal as it went back down. This is going into time frame continuity because this was, again, we were talking about with Val asked the question, price is going down. As price is going down, you got a pop here that happened. It popped up back to VWAP, but once it reversed and went back down, then this is another entry as a rejection off VWAP. This is an entry, another entry place for a call credit spread going back down. Even these, once these popped up, this is an entry place. This is another entry place, but now this one, you would have had to watch it because this was a reversal that would have came back and got you, would have gone through your strikes, which we'll talk about when do we exit here in a minute, because if you were entering here and price came back through it, you would have wanted to exit because your trade would have been in trouble. Okay, we'll talk about that more in a minute. All righty, but those are places where we can enter. We're on entry criteria right now. Entry criteria, okay? Magic 8 Ball best times. I'm gonna talk about Magic 8 Ball here in a minute. Magic 8 Ball best times for the day. There's 2 or 3 that we see each day that are best times based on Magic 8 Ball. Or you can follow the coach's alerts. I'm the coach, right? I'm following one of these things up here. So if you are saying, I'm not really sure which of these things to do, you can literally just follow my alerts because I'm putting alerts in the chat that say, okay, here's a trade alert. And then when I exit a trade, when I leave it, I'm saying I'm leaving. I've exited so-and-so with the PDT hack, or I did a buy to close. If you should have your profits, go ahead and close that trade. I'm giving those alerts along the way. So you truly could just follow the coach because I'm doing these things. And maybe if you follow my alerts, you can see what's happening. And that's one way you're learning along the way what's going on. Where do we see these alerts? You see these alerts either in the Telegram or in the school chat. If you're in school, I put in there, you can go straight under the alerts area and you can see there that, that there's alerts. I'm bringing school up to the screen. But if you're here inside of Option Seller Zone membership under Trade Alert, here, every alert that we put, I put it right here and they stay in order. And when they pop up, you're right here. You can follow the alerts here. And in Telegram, I will say stuff like there's a trade alert in school. All right, there's a trade. So there's alerts. You can just follow along with the alerts that I put out. If you're at the place where you're still learning or you're not confident enough to pick your own yet, you just follow the alerts I put out. Because like I said, I'm following these first few things up here, right? Or number 6, whatever you determine for yourself, because I have members who have other strategies that they're using and whatever they've determined for themselves to do, that's what they're doing. That's fine. That's fine. I'm all about equipping traders and teaching traders to be able to trade for themselves. But along the way, you can take alerts, you can do Magic 8 Ball, you make it all work for you. Okay? Make it all work for you. Let's talk a little bit about the things that are in here. I want to say I'm going to talk more about those things, but I want to talk about sizing before I get any deeper into the particular entry exit. Because this is something because this is something that we need to be discussing. All right. Two things. If you have decided that the money that you have is just, I'm trading this and I'm okay with walking away from all of it, then, yes, Chris, then if you decided I'm walking away from this completely, then trade how you see fit with the less than 5K. If you say, okay, I got $2,000 and I'm trading this $2,000, one contract, however, then yes, go with that, okay? But just know my suggestion is, these are my suggestions for you. If you have less than 5K, you should trade one contract at a time. One contract at a time. Right? If you've got less than 5K, you shouldn't necessarily be in 3 and 4 and 5 contracts, because 2 contracts is $1,000. 4 contracts is $2,000. Right? That's $2,000 of risk. Yes. Now, if you are very meticulous about shutting off your trades after a certain amount of money, then go for it. But if you know you're one who has a hard time pulling the close trigger, then you need to be in one contract. So if the $500 goes poof, you are okay, right? Okay. Trade one contract at a time, 2 contracts at a time. One, you know what I'm saying? Have defined profit targets, which means I'm going to get in this trade. I'm getting my $40 and I'm gone. I'm getting my $50 and I'm gone. And then after I've gotten my $40 or $50, then I'll put on another trade. All right. I'm going to trade one contract at a time. After I've closed this trade with my profits, then I'll enter another trade. But I'm not doubling up. I'm not stacking trades. I'm doing one trade at a time, one contract at a time. If I got less than $5,000, have a defined stop loss exit that says if the price gets to a certain place, we're going to talk about stop losses here in a minute. The price gets to a certain place, I'm gone. I got a certain amount I'm exiting for a loss, period. And I'm staunch about it, right? This year is not the year we taking ourselves to max loss. We cannot, because it takes us too long to make that money back. It takes us too long at $70 and $80 a trade to make our money back. So we have to turn these off before we get to max loss. We don't want to keep putting money back into our accounts. We're going to earn our way back. Okay. And we're going to avoid lotto trades when you got less than $5,000. What's a lotto trade? I think that's going to be okay. 330, 345, them lottos. I'm just jumping in. I don't have a good confirmed entry. I'm letting it ride. That's lotto. We're not doing that. No. And actually, a person who has more than 5K doesn't do that, because they're like, I'm not trying to lose my money. So this is criteria, strong criteria. Come on, listen, I know a lot of people are in this situation. This is strong criteria for less than 5K people, but we've got to put some stringent guidelines in place for ourselves going into 2026. One contract at a time. You get your profits, you're out. Then you can trade again if you want. Define stop loss. Clear. You hitting it. If it hits, you're out. All right. Your goal is to stack and compound your money in order to grow the account and avoid max loss. That's your whole objective. Your whole objective with the account that's less than 5K is to stack and compound this money. That's your whole goal, is to avoid max loss, capital preservation, and to grow it, compound 40, 40, 40. Y'all know we got TJ in this group. TJ gonna take her $40. She gonna put her Denzel Washington meme up here, and she gonna shut her computer down. I'm leaving here with something. And she taking her $40 and she gone. We still sitting around mad because the price is dancing all over the place. She gone. Her gone. Oh goodness. Chris said, can you show how to execute the trading process based on an alert if Tradier is the broker and how we can trade will be executed? Yes, please remind me again to do something in Tradier because I want to be sure to show how to execute in Tradier. Okay. All righty. Sandra says, if we're using the PDT hack, how do we define the stop loss exit if we're waiting for the contract to fill? So is a $40 profit my stop loss for the PDT hack if the objective is $40 per trade? Okay, wait, your question is not clear yet. If we're using a PDT hack, how do we define the stop loss exit if we're waiting for the contract to fill? Okay. Is the $40 profit my stop loss? No, for PDT hack. Okay, so you're going to set your, we'll talk about that in a minute, but you are going to set a dollar amount based on how much you took in, not based on the PDT hack. We'll talk about it in a second. I'm going to get to exit criteria. Yeah, as soon as your PDT hack hits, then you should exit. If you're going for $40, as soon as that hits, you're gone. Yeah. If your account is between 5 and 7K or you got a bigger account, maximum 2 contracts per spread, 5 wide spreads, 2 PCS stacks. You maybe do some stacks, maybe 4 contracts total. PDT hacks are aggressive. You know, once you, especially if gamma flips, you're closing off stuff, right? Full mental clarity, you're closing things. You're in full training because you're looking to how can we get to repeat mode, survive, and master your emotional control. Because remember, if you got 5 to 7K, you're now starting to think about how can I scale this? You're looking for consistency, muscle memory, mental bandwidth control because you're now putting more money into the trades. So you're looking to see how can I get ready to scale? We got a thing here for 10K and 15K. 10K, you're going up to 3 contracts. You may be stacking. You aren't necessarily putting 6 contracts all on one trade. You're putting 2 contracts at one PCS, 2 contracts at another, and maybe 2 at another. You're not, or you may be doing 3 and 3. You're not necessarily putting 6 contracts all at one place. Make sense? You're not necessarily putting all your money on one trade. You're stacking it, right? Stay with 5 wide or 10 wide, same risk controls. You're building bigger daily income, right? 20 or 30K, you're doing something very similar. But at the 20 or 30K account, you're at professional part-time income phase. You're making 200 to 500 a day. You're looking at consistency. 20 to 30K, you're opening and closing your trades. You're not waiting for them extra $5 at the end. You are opening your money. You're opening a $70, $70 premiums, and you're closing $35, $40, $50. You're closing it up. You're not staying around for them last $15, $20 because you are at, 8 to 10 contracts a piece. So you're not waiting around for 15 or 20 more dollars. You're closing that trade up, taking your profits off the table, taking your collateral and your risk off the table. And if you trade another trade, you're waiting for your next good entry, or you're calling it a day. All right. But you see, these things are based on the amount of money in your account as you scale it up. And we're not scaling up too fast. We're taking our time and making sure. All right. All right. Now that we talked about sizing, because that's part of risk management. When we talk about risk management, we do talk about the sizing, but I think sometimes our sizing is not necessarily based on, it's just based on adding more contracts. We don't think about that now we're staggering them. That's one thing. We're not putting all the money at one place, and the closure. When you have bigger accounts, you're now closing things quicker. Okay, you might jump in at 80, you might get into a trade at 80, but you're closing it at 40, right? If you got 6 and 7 contracts, you're not staying in there waiting until 4.95 on the PDT hack. You're not waiting for that, because why? You know what I'm saying? You got 6 contracts at $50 a piece. That's $300. You after $50, you closing it. Even if there's $25 left, you're closing it, taking your risk off the table, because at 6 contracts, you've got $3,000 at risk. You're taking that off the table and you're closing that down. And then you're saying, okay, I'll wait till the next trade if there's a next trade, and you're going on. But $300 a day is good profits, right? Okay. Opening range breakout, one of our favorites. Mark the 15-minute or the 30-minute opening range. Okay, I told you I like the 30-minute, but we got people who do 15, and I think that's cool. When price breaks out, you want to confirm it on a little bit lower time frame. I talked about if you're in the 15-minute, you maybe go down to the 5. If you're on the 30-minute time frame, maybe you drop down to the 5 or 10 to check to confirm that it's really out. Enter a spread with the trend. Enter a spread with the trend with strikes outside the opening range. I'm going to show you what that means. So that means you enter a CCS with the downside break. You enter a put credit spread with the upside break. So if it breaks to the downside, you enter a call credit spread. If it breaks to the upside, you enter a put credit spread. And then you use the PDT hack to lock in your profits or a smaller loss if that's what you need. Okay, TJ says if the first 15-minute candle is a doji, watch out for a reversal or go for the second breakout. Thank you, baby, because that is a very good piece of data. If the first 15-minute candle is a doji, which means it's not clear which way we're going, got a little small body, watch out for a reversal or wait for the second breakout. And this happened on Friday. Okay, let me show you real quick what we're talking about. If you're on the 15-minute chart, 15-minute chart, what TJ is saying, and that's a piece of information we had forgot all about, didn't we, Janae? That's why people was in put credit spreads on Friday, because we didn't wait for that doji. This seems to be dashed. Okay, that's a dash line, and this. Okay, so this is the 15-minute chart, right? This is the 15-minute chart, which means this was Friday. This first candle right here is the 15-minute. This is the first 15-minute candle, right? The first breakout was right here. Broke out like it was going somewhere. Second candle was still out. These look like they were, it didn't stay out. This went out and came back in. It was out, came back in, right? For the 15 minutes. So it stayed in the opening range a little bit. But if you had gone down to the 5-minute, you would have seen that it would have still looked like it was outside. Okay, I'm gonna put you on the 5-minute chart and put us back on Friday. Nope, where's Friday at 5 minutes? Friday, boop, 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 Friday. There we go. Okay, this is we're here at the 5-minute when it broke out. There you would have felt like, okay, we're outside. These 2 candles right here where my circles are. You might have thought it was going to be outside because we got a lot of wicks out here. But these wicks out here also tell you that it wasn't going far. This wicks let you know there was still selling pressure. Right, this candle here, this 10 o'clock candle, was, at least it closed outside, and the very next candle said, no, I don't think I like it out here, and it turned right back around. This is where I was mentioning the second break of the opening range. This is the second break. This is where it broke the other side. It didn't break to the downside here. It broke. This is the second break going downwards. And when it broke to the downside, this is where you do a call credit spread with the trend, which is downwards, but you put your strikes outside of the opening range. Opening range here goes outside of that top candle. I think I did 68. I did 68.95, 6,900, but you could have gotten a little closer, because really you could have gotten 68, 90, 95. I did 95, 6,900. I did a little bit further away. right? Call credit spread 68.95, 6,900, call credit spread going downwards. Okay. Now, if somebody's using Chris, tell me whether you use the app on Tradier or do you use the computer? I think it's easier to use the app. 68.95 would have been the negative one, or sell to open if you're using Tradier, and the 6,900 would have been by the BTO on the call side. That would have been on the call side if you were using the app. That's sell to open and BTO. So you actually got a few steps to learn credit spreads before you're really ready to implement the alerts on Tradier, because you need to know which ones are the negative and which ones are the positive before you're really good with that. But call credit spread, the first one is going to be the negative. The second one's going to be the positive. On the put credit spread, it's going to be opposite. So STO 68.95, 6,900 would have been sell to open, buy to open. That's what STO and BTO stand for. You would have picked those and then gone through the steps. I'll probably bring up Tradier soon enough and push some buttons later in this call. Okay. Okay, so that's what have been call credit spread, riding with going with it, the trend going downwards. I collected $50. I think it was $50 I took in when I did mine. A little bit closer would have probably gotten you $70. But then you're using the PDT hack. And I'm not going to teach the PDT hack per se on this call, because I've got so many videos that teach the PDT hack. And I think it's time consuming enough that you really need to watch a video in your time. So that way you can stop and rewind and do that. And I'm not going to teach it here. I've got so many videos on the PDT hack that you can learn it. But as your price is going down, as prices going down here, then the next thing you're going to do is a put credit spread with those very same numbers, 68.95, 6,900, same numbers, but now you're doing a put credit spread. You got to do the opposite of this, same numbers. And then this was 50 cents. Max loss would have been 450. I put in 490. 490. This is $40 of profits. $40 of profit is what I did on Friday, right? I put in a put credit spread at these same numbers, the same as those original call credit spread. And I'm not sure why we needed the AI companion, but sure. And then 68.95, 6,900, 4.9, $40 profit. And I was able to lock that $40 profit in as price was falling. And price is falling here. Okay. Questions here? We do have PDT hack videos that I will make sure that you can get to those. We've got so many of those in the chat. I'm not going to take time to teach that on here. Okay.
I didn't understand. I'm sorry.
Yeah, go ahead.
I didn't understand when you say second there and circled in black.
Yes,
what were you?
that is the second break of the opening range. So
there we go. Okay.
This was the first breakout of the opening range was up here, right? So it broke out to the top. That was the first breakout.
Right.
But the second breakout, it broke out down here. This is the second break of the opening range going, because I said that one of the entry criteria is the second break of the opening range. This is the second break. Okay. Is that you, Avery, talking?
Absolutely. Happy New Year's. Happy New Year.
Hi. How you doing? How long does it take to lock a PDT hack? It depends. PDT, it depends on a couple things. Number one, it depends on how much you trying to get out of your PDT hack. So if you got decent premiums, when I say got decent, if you took in like 80 or 90 bucks and you only want 30 or 40 to lock in, it won't take long at all, as long as the price keeps moving. If you took in, 40 or $50 and prices just dancing around and not really going anywhere, it can take all day. Right. So it really depends on, is price still going in the direction you want it to be going? If price was to just sit inside the opening range and it wasn't going up or down, it wasn't going down, just was, let's say price kept staying in here, it wasn't at your strike, but it wasn't doing anything, then it would take even longer, because price needs to be going away from your strikes in order to fill. So that question is really like dependent on what price action is actually doing. Okay. Definitely depends on it. Should we do the PDT hack before profit is reached? I do. I put my PDT hack on after I enter the first trade. I usually go ahead and put my PDT hack desires on after that. Don't put the PDT hack on until after your first trade is filled, of course, but I go ahead and put my PDT hack on after that, especially if you know how much you're trying to get. Like TJ knows she wants $40. She puts it on for $40. She ain't sitting around like, let me see what. She just puts it on for $40, and when it hits, she gone. Now, sometimes the price keeps going. Like on, Friday, TJ literally could have waited for more money because it price kept going even further. She could have waited for $50 or $60 or $70, but she goes for 40. She's just compounding and stacking that money. It's a personal choice, but you really could, if you're just going to set it to get what you're going to get, then get your money and be gone. Okay. If you're looking at the 30-minute opening range, right? This is the 30-minute. I'm on a 30-minute candle, 30-minute chart now. And 2026, 30-minute chart is here. I'm at the 30-minute. So we got the opening range. I've got my outer. Okay. So now notice though, where the 15-minute candle broke out up to the top side and gave you a little false positive, right? This 30-minute candle didn't do that. The 30-minute candle is this green one. There's no false breakout to the top here. You have to just wait. And the 10 o'clock candle breaks out only to the downside. There's no reason for a second break. It only breaks out one time, and it breaks out to the downside. And then you go with, it breaks out here. I'm not sure what I'm looking at. It breaks out to the downside based on that, So once you get a break out of the opening range, which is this dash line, once it breaks to the downside, then you still enter that call credit spread. I told you what I entered, and I entered it based on that 30-minute call credit spread. 68.95, 68. That might be why I did 68.95, was because it was the 30-minute. And I did the 68.95, 6,900 call credit spread. And I closed it with the PDT hack, but as you see, price never came anywhere near it. I really could have left it to expire, but I'm a fan of close every trade. So I closed mine up with a PDT hack and or a buy to close. So
May I
yeah,
bother you with one more question?
you may.
You see that false breakout to the top that happened? I've been guilty of taking that trade at least 3 times. I've done that
Okay,
where
well,
I'm
don't do
watching the
that.
30-minute range
Yeah.
and I'm like, okay, whichever side it breaks, that must be the way. And
Mm.
it broke to the upside, and I would get in that trade, and my order will fill so quickly. I'd be like, man, that order filled so quick,
Mm-hmm.
and then boom, what's supposed to deteriorate, I'm already $100 down on the trade. I said, how is it that the money? So I guess my question is, how do you, when you think you're in a breakout, do you still have the chart open and you got your order getting filled? Because if I would have just had the chart on the side and looking at my order entry, I think I would have had enough time for pause to say, hold on, that thing's going the other way. So I guess the opening range breakout still has to be taken with a bit of cautiousness.
Yeah, I agree with that. I agree with that. Mm-hmm. Mm-hmm. I agree with that. Yep. All righty. Do me a favor, make sure everybody, as you continue, as we go through it, make sure that if you can, put your questions into the chat so that I can keep a good recording, and then I'll answer your questions as we go. All right. Tanya did mention there was a good set of tweezers down here at the bottom. This was a good reversal, and we did take this. I did take this reversal. We did take this reversal. This good tweezers down here was a good reversal back to the upside. We put some put credit spreads underneath here, going back up. So we've got call credit spread up here, PDT hack to lock it up, right? And then put on a put credit spread underneath here. I think I might have done like 68.05, 68.10, and rolled this right back up. This 30-minute time frame can help you, 30 minutes to an hour actually even can help you where you don't get yourself shaken out sometimes. All right. All righty. Okay. So that's I'm a big fan of the opening range breakout. I didn't do it a lot last semester when I was teaching, just because my teaching times didn't always correlate with it, but it's really good to see, as Avery was saying, it can be still taken with a grain, but you can but a lot of days at the end of this, I'm going to go through, I'm going to back test, and I'm going to show us places where the opening range breakout would serve us more days than not. It's a very good strategy that it don't work every day, but it works 9 out of 10 days. Okay. And even on the days it doesn't work, you can do an iron condor and be fine on those days. Okay. On the days that it doesn't break out. All right, let's go back to our slides. Okay, we're gonna keep it moving. PDT hack, talked about that. We're gonna make sure that we'll get videos for those. Mark your opening range when price breaks out this was the second break. Price break the second time, enter a spread with going with the trend. We talked about that already. Okay. Another entry criteria could be reversals. We kind of talked about reversals a second ago, but reversals kind of go with the strat. We've talked about the strat and what that looks like on our chart. I have one of the indicators that I use is the strat assistant. I'm going to talk about indicators soon here in a minute, but I use the strat assistant to help us identify reversals on our chart. Okay. These strat entries also have strat exits, right? So a bullish reversal, a 2 or 3 candle, you got a 2 down and a 2 up. There's an entry to go along with this. Once that 2 down candle, the next candle goes beyond the top of that, then that is an entry. Right where it says enforce, that is your entry point. Price passing the top of that 2 down bar, the top of the next highest candle is your target. And your stop loss is the bottom of this 2 up candle. You can go at the bottom of here, or you can use the bottom of this 2 down candle. Sometimes this candle is too far away and you'll feel like this could be your stop loss. That may feel like it's far away, but for us as sellers, this may be an okay place. This is where you would put your stop loss or where you'd put your spreads. This may be where you put your spreads at or below that 2 down candles, where you would pick your strikes would be there. Okay. That could be your strikes. That could be your stop loss, something like that. This is if you're using the strat for your entries. Okay. Two down, 2 up reversals is what we use for those of us who use the strat. And a lot of us do. Y'all know we like the strat. I'm a strat fan, right? This is a confirmed reversal. 2 up, 2 down, or 2 down, 2 up, sorry. And then a bearish reversal, 2 up, 2 down. Same thing, just flip it around, right? And I'm going to give y'all all of these slides so you can see what we're doing with these. Price passing the bottom of the 2 up bar. This is your entry. The bottom of the next candle would be your target. If you were looking at where should I maybe lock in or be looking to make sure that price doesn't go the other direction. And your stop loss would be the bottom, I'm sorry, the top of this 2-up candle. If you're looking for your stop loss, or where would you pick your strikes, that could be where you are with that. Okay. Okay. Another thing for reversal. Failed 2 down. Now, y'all know we like our failed 2 downs. Our failed 2 down candle where the number is red, but the candle is green. This is a good indication of a reversal. Price went 2 down, so the sellers, but the buyers stepped back in and pushed it back up. A failed 2 down. Notice here, the price went down, got long wicks, but the price turned around. Entry is the price passing the top of that 2 down bar. Target is the next candle up, and the stop loss is the bottom of that 2-up candle. Failed 2 down. There's also a failed 2 up if your reversal is going in the other direction. Okay, these are confirmed reversal. There's an entry time for these, and there's a potential exit for these. You've got your entry and you've got your exit. If you're entering based on these, you need to be exiting based on these. And this is where we sometimes drop this ball. We're like, okay, I'm entering based on my failed 2 down. But then price comes back and pulls back on us, and we're like, but wait. We don't necessarily exit based on that same failed 2 down. We're like, what? Price is beyond it. Wait a minute. What do you mean? No, if you got a strat-based entry, then there's a strat-based exit for that. So if you use the strat to enter, you should use the strat to exit on the same time frame. What I'm saying is, if you're using a failed 2 down as your entry criteria, then you need to use that same failed 2 down as your exit, right? So let's say here, if you're using this failed 2 down as your entry point, this right here would be your entry, right? Once the next candle crossed that should be your entry, and your stop loss would have been the bottom of this candle. If the price had come back down to that would be your stop loss. Okay, you would say, if the price comes back past here, I'm out. Okay, so just because if you use your strat as an entry, you also should use those same candles to help you exit if you need to. We don't ignore that. You got to use it for both on the same time frame, by the way. Okay. I know I may be throwing a lot out here, but I'm bringing all the pieces together so that way when you go back to review this entire video, you can see what I'm talking about. I see there's some conversation about tweezers in the chat. This is a set of tweezers where you have two things right here at the bottom that are basically the bodies of this candle are at the same place. These are tweezers. Here's a set of tweezers, something that's like a reversal, where it's kind of another support for a reversal. They look like they're at the same place of like a pair of tweezers would be. Okay. It can help you to see that maybe it's a reversal. All right. Keep moving, Arlissa. Keep moving. Keep it moving. Okay. Magic 8-ball entries. I've talked about we can enter based on opening range breakout. We can enter based on confirmed reversals. We could enter based on Magic 8-ball times. Magic 8-ball is a third-party Discord. I make absolutely no money dealing with Magic 8-ball. It is $25 a month, but there's so much data that is available in Magic 8-ball. You do utilize it. Most of what we use in Magic 8-ball is this gamma information right here, because this chart here is given to us. It comes out every 5 minutes. So we use this chart. I use this chart to guide, like, where is price actually going? The big green bar says price is going to try to go there. A bunch of red shows up. It lets us know that price is probably going to pull back. This line between red and green is the flip zone. I have a whole video about how to use gamma. So if you're interested in how do we use gamma to help inform us for our trading during the day, I have a video about it. I taught a whole thing about it, and I got a playbook. You could read it if you're more of a reader versus a video watcher. I have a book about just reading through the things that ChatGPT helped me to understand about how to use gamma. Okay. Magic 8-ball also gives every 5 minutes, to go along with these charts and other stuff, it gives this information every 5 minutes for SPX. So when I say use a magic 8-ball best time, right, this information comes out. Example trades here at the bottom. Let me change it to a color we can see. Magic 8-ball has example trades, they call it. We generally do the verticals. Now, when we first learned about Magic 8-ball, we was Magic 8-balling all day. We was all day long looking at the trades in Magic 8-ball. Come to find out, Magic 8-ball doesn't, I mean, it's an algorithm. It's based on delta, gamma, open interest, and one more thing. Forgot the other thing. I'll go see in a minute, but it's taking a whole bunch of data in that time. It doesn't necessarily look at the chart though. It's taking those pieces of data, volume, thank you. It's taking a bunch of data in, rinsing and repeating with the algorithm and spitting out this information, which is great information, by the way. But if there's a reversal that happens on the chart, Magic 8-ball doesn't pick up those quick nuances in the chart. So we realize very fast that we have to look at our chart. But Magic 8-ball does have times of the day that have shown themselves to be more accurate over the course of time. So in 2025, we have found that there are some best times like every day for this vertical. And that is like 105, I think it is. 105 is like a best time for Magic 8-ball every day for the vertical. Right, it just over the course of 2025, 105 is like has like a 90% win rate or something like that. You know, it's something like that. Anyway, you got the butterfly, you got iron condor, you got a sonar, which is a tighter iron condor, and you got verticals. So sometimes we just look at a best time on Mondays. A best time is like 11 o'clock. Tuesday has a time. Wednesday has a best time, but then overall best times every day is like 105. So I may look at a 105 every day and look at my chart to see, does this 105 look like it might be something that'll work? And then I may do that. I used to take Magic 8-ball sight unseen, like Magic 8-ball 105, I'm rolling with it. Now, and then, you know, you get burned a time or two on that. You're like, well, let me go look at this chart first. So it's great information. I'm going to open it up though, because I want you to see what it actually looks like in here. It is, to me, very much so worth the $25 that is charged for it, because the information here is key. Magic 8-ball is here. So the gamma information, there's two different types of gamma information. There's the gamma flow, which we're looking at right here. All of this, again, this comes out every 5 minutes, all day long. This information shows you the big green, the big red, the calls and the puts of gamma exposure, how much put volume, how much call volume, what is the total gamma up here. The spot price, which is current price, is gamma rising or falling. Where is price moving up and down? Key information. It helps guide us all day long. Okay, you got that, and then you've got SPX. These all through the day, you get this printout every 5 minutes. It spits out, and I'm going to another one because I want you to be able to see too. This is the piece of information, is the volume, gamma, interest, open interest, and delta. And it tells you based on each of these, is the price, are in a bearish environment or bullish? In this case, you see on Friday, almost all of these said bullish. This is at 3:15 though. It's saying it's all bearish and price was going up. So you kind of keep that in mind. It's rinsing and repeating and saying, okay, this one predicted price would close at 68.50. This one says 68.50, 68.68, 68.50 something. And where did price close on Friday? I don't remember. Price closed on Friday at 68.58. So during the day, you're getting this information of where it's going to close. It's here. Then it gives you this. This is happening all day long. This, you know, kind of moves depending on what price action is doing, but it's predicting where price is going to potentially close between what range through the day, right? It's doing that. And that can give you, again, it gives you some guidance, right? It's not spot on, but it's a lot of information based on an algorithm, and it gets you in the ballpark. It can get you in the ballpark, right? You can't give it 100% though, because you will get breached fooling up with Magic 8 Ball. Oh, Magic 8 Ball said 68.50. So, and you at 68.55, and you see it close at 68.58. So your trade would be breached if you were in the wrong place, right? So you have to still look at your own chart to make sure that you're getting the information you need. This is another gamma chart. It's a different layout, but this one has a little more information in it. That's also in Magic 8 Ball. Again, to me, Magic 8 Ball is worth the $25 a month. I'll happily pay it. And the guy who's running it is actually putting in a version 2. He's updating the versions. The one right now, Magic 8 Ball is set to where it'll run, and it is designed to run to expiration with nobody involved, but now he's putting in like a stop loss plan and whatever else. So it has SPX, SPY, XSP, Triple Q, Apple, Tesla, RUT, NDX, and the logs for all the others. All that stuff is here. That's Magic 8 Ball. Okay. I think I put a link into the chat. Not the chat, into the slides. I think I did. But I know we have it in our Telegram if you are interested in getting Magic 8 Ball. I pay for it. And again, there is no affiliate link for Magic 8 Ball, so I don't make a dime by telling you to go get it. So there's that. Okay. Sandra said, you got the tweets. Okay. So looks like you understand it. Let's talk indicators. We're talking indicators. We're doing good. We're doing good. I'm an hour and 15 minutes in, and we're doing good. The Strat Assistant is one of the indicators that I use. If you type in Strat Assistant, it gives you the colors. I don't really use the colors on it because the colors I think are confusing. So I turn the colors off personally. It gives you full time frame. FTFC is full time frame continuity, and it gives you combo signals on your indicators. Okay, we're ready for indicators. The Strat Assistant. If you're here, I take Strat Assistant, and on the first page where it says inputs, I have everything checked on here except for the debug label beta. And I don't know why that's not checked. I just have never checked it, right? But under Strat Assistant, I have everything checked. Under style, where it says bar color here in the middle, where it says bar color, I unchecked the bar colors. And I unchecked it because when you have it checked, it makes your bar colors to match. See how the colors of the bars are different. That means like the 1 bars are purple and the 2 bars are green and the 3 bars are red. I didn't want that. I wanted red and green. So I unchecked that, and I just have red and orange bars. I don't want to be trying to remember what color means what. I didn't need that. So for me on the Strat Assist, the only thing I changed was I unchecked the bar colors. Okay. For me, I unchecked the bar colors. Sorry. Okay. Everything else I left the same. I didn't bother anything else. I left everything else checked. It gives you whichever. Now, if you like certain strat combos, you can check or uncheck certain strat combos. I left everything else the same, except I unchecked the colors. I don't want the bar colors that they offer because that was confusing to me. Okay. That is the Strat Assistant. Notice when I talked about full time frame continuity, it shows you over here, see over here to the right, where you see the 30H, 4HD. This is the time frames. It's telling you whether the 30-minute is up and the hour is red, the 4-hour is green, and the daily is red. When I was talking about going into full time frame continuity, you want to be trading with the time frame continuity that is a higher time frame with what you're trading. So when we were talking earlier about going with the day was red, you want to trade with the day. You don't have to have a version of TradingView. You just need to have whatever number of indicators. So I have the one where I get a certain number of indicators. You just need to You don't have to have a certain version. You just have to have indicators. I'm not sure which subscription you have that you have indicators, but I use 4 or 5 of them. So I'm not sure which one you pay for. Okay. So that was Strat Assistant. That's Strat Assistant. Okay. Next one is VWAP. These are the indicators we use every day. VWAP, VWAP, volume weighted average price. Volume weighted average price, VWAP. You can go to the top and type in VWAP. I picked the top one, volume weighted average price. The top one here is the one that I picked. It's a statistics based, it's using volume. You can only see it on TradingView. You cannot see VWAP on Thinkorswim because SPX does not have shares, and VWAP really does need shares. But TradingView allows you to see it on one of the SPXs. Price always reverts to the mean, which is the VWAP line. This blue line is called VWAP, and I use VWAP all the time, and you should too, to be honest. No matter what you're trading, you should be using VWAP because price wants to come back to the mean. It's called mean reversion. Come back to the average. The mean is the average. Price wants to come back to the average, right? I'm going to go put it on the chart. I have my VWAP you see here is on. I was just talking about when price rejects off VWAP. Price is going to always try to come back to VWAP if it recovers it or if it dances around it, but price likes to be near VWAP. Even if it goes away, it's going to come back. This is a statistics-based indicator, VWAP. Okay, you probably heard it mentioned before, and if you were like me before, didn't know what they was talking about. Now, the other thing I changed on VWAP, because I did make a change, is under inputs, where you're on band multiplier 1 instead of 1.0, under band multiplier 1, I made it 1.3. And the reason I did that was because I wanted a wider range in that first band because price stays, closer to that. I wanted to know that there's more price action will stay in between that first band. So it lets me know that price is going to maybe bounce out, going outside, but it's going to try to come back in. I wanted a little bit wider than just one standard deviation. I wanted it 1.3 standard deviations. That's the only thing I changed in here was I made the bands multiplier number 1, I made it 1.3. All right, y'all stay with me. Do not get weary. We got a little bit of ways to go, and I don't want you to miss anything. So please try to stay focused. Go get you some water and try to stay focused. Okay, this is good information. I don't want you to miss it. Okay, don't watch TV. Pay attention.
You glitched
Okay,
out on me
1.3.
there for 1 second, Arlissa. You said
Yep.
1.3, right?
Yep, 1.3. 1.3. Yep. And then in style, I just changed the colors. I like it green, yellow, and red for band 1, 2, and 3, but you can pick whatever color you like. I like green in the inside, yellow a little bit wider, and red all the way out. That's just, for me, lets me know that we're going. Green is kind of where they're going to stay, and then yellow is getting a little further out, and then red is definitely it's going to revert back after the red. That's the way I have mine, but you can leave the colors however you see fit. But I like the green, yellow, and red. Mosiah said, I watched Avatar for 3 hours and 17 minutes. So yes, I did. I could not. We got ready to. I said, I'm not going to watch 3 hours and 17 at the movies. I'm not doing it. I'm gonna need to refill my popcorn, and I'm gonna stay at home. Let me just not do this to myself. Okay, so that's but thank you for saying you hanging out. That's VWAP. Okay, we use VWAP every single day. It is a key indicator that we use. So that's one that you should have on your indicators. Okay, add VWAP. All righty, not just for SPX, but VWAP is good for any stock that you're trading. All righty. The next one that I use is pivots. Now, pivots, I like having pivots because I think it provides good support and resistance. If you're only going to pick one between pivots and VWAP, get VWAP. But if you have enough indicator choices, then get the both of them. Pivots, pivot point standard. I just typed in pivots, and then the top one that came up is pivot points standard. Pivot points standard. And the pivots are basically support and resistance. They show us like support and resistance. And they help, I feel like they help strongly when price is moving and you say, okay, if price is coming down, you're like, okay, there's a pivot down here. Like you say here, there's a pivot at 68.75. It kind of gives you some comfort to know that price is going to something and it's probably going to reverse, because sometimes SPX is moving and you're like, is it going to stop someplace? And a pivot will generally be the place that it will stop and reverse or stop and pause. Okay. I like having them. You put the pivots on, and then you've got 3 resistance. I think it goes up to 5 actually. And you've got 3 to 5, 3 to 5 supports, pivots, inputs. Actually, I wanted to change this color to something else. So traditional, I didn't change anything here except the pivot, and you can put as many as you want, S1, 2, 3, 4, and 5, and then you got R1, 2, 3, 4, 5. You can change the colors if you want them to. I don't. I leave them the way they are. And you can make them, I think they can get thicker, but maybe you only want 3, you don't want all 5. It's really up to you. I leave them all on, and I make the pivot black so that way it stands out from the others. The pivot is the main daily pivot, and then the others are support and resistance. And then for style, I just picked everything. Pivots are going to be like support and resistance on that chart. Okay. Again, if you've got to pick between pivots and VWAP, I'd go with VWAP, but if you can get both, you should. Okay. What's our next one? Fair value gaps. Fair value gaps. Fair value gaps. I use the indicator, the one by Nephew Sam. I use the fair value gaps by Nephew Sam. Now, believe it or not, I'm one who likes to have a minimal amount of indicators. It might not feel like it right now. I'm on indicator number 4, but I like to have a minimal amount of indicators. And a lot of times I'll leave some of these turned off until I'm at certain times or I'm looking to see what is price actually doing. But I like to have them available to me. Fair value gaps. There are basically imbalances created when price moves quickly in one direction, but the edges act as support and resistance. And that's why I have this on it, because we as sellers, we need to know what is support and resistance. And a price will go into a fair value gap because it's going to go and feel that imbalance, but then it'll pull right back out of it. Once the imbalance is filled, it will go back in the other direction. So sometimes we need to know that even though price is climbing up, it goes through that gap and then pulls right back out of it. We need to know that. Otherwise, you may potentially get shaken out of your trade because you're like, price is going up, when it's really just going back through a fair value gap, and then it pulls right back out of it and goes the way it was going anyway. Okay. That's one of the reasons why now I have a video on fair value gaps, right? So any of this that you are, confused about or need to know more information about, we got something you can watch. We got information. Or you can always ask ChatGPT, explain fair value gaps to me. And the ChatGPT is going to put it to you in some shortened terms that you can understand. All right. And then you can go from there to determine what other information you need. All right. I believe it was Lillian who asked about the indicator. Lillian asked about an indicator that is on ES that gives us the different stuff and the pre-market and all. Okay. Now this is a newfound indicator for me that I run only when I'm running ES because it's a lot. Okay, where it is. Now, y'all know I had that book. I showed y'all the book of Smart Money Concepts, right? Y'all remember the book I showed y'all? Oh, I didn't hear the Smart Money Concepts book. I have an indicator I look at on ES. Let me put ES on here. It's called Smart Money Concepts. Okay. I'm going to turn off some of these other indicators so that we can clearly see just that. Turn off my VWAP. Okay, Smart Money Concepts. Now, what I like about Smart Money, let me get a smaller time frame. What I like about Smart Money Concepts is it will do stuff like I'm not sure if y'all can see, it's kind of small here, but Smart Money Concepts here says PDH, previous day high, previous week, the day, 4-hour high, previous day. It's got other things here. So where I was talking earlier about making sure that you're charting your lines like previous quarter high and low and previous day high and low, that kind of thing. This is where this indicator comes in. It's got a BOS, which is break of structure. So if you're one who, I always struggle with charting structure, but this indicator helps you to see when structure gets broken without you having to identify that on your own. Because for me, I'm like, sometimes I struggle with what does that actually look like? Okay. They got premium zones and discount zones and change CHOCH, which is change of character. Now there's a lot happening in this indicator. Okay. It's made by Lux Algo. Y'all already know Lux Algo goes hard. But this is called the Smart Money Concepts. Smart Money Concepts. Previous day high, previous day low, previous week high and week low, all those things are already charted in here. So all I have to do is run the indicator and it puts all those things on the chart already on the ES chart. If I put SPX on here, it would do it on whatever. It'll do it on whatever, but it gives you the pre-market high and low. I think Lillian was asking about the pre-market high and low. See here, it says right here, this was the pre-market low. This is the pre-market high. And of course, those things are going to provide support and resistance. So that is Smart Money Concepts. Smart Money Concepts. And that's by Lux Algo. Okay. Believe it or not, I cannot watch a lot of these things all the time, and you'll see that any given time I'll have this stuff turned off on my chart because if it's too many things, especially the fair value gaps, because the fair value gaps start to overlap and it's red and green and red. I'm like, okay, no, I can't. There's too many things to watch at one time. So I'll turn some things off, but I do like being able to have what we need to have. All right. That was Smart Money Concepts by Lux Algo. Now I have the one on the thing on the subscription level on TradingView. I upgraded mine when it was Black Friday so I could get more indicators. I heard a noise, so I could get more indicators. Did somebody have a question or something? I just heard a noise, but so I can put more indicators on a chart. So if you don't have that ability, you got to do something different, which one of the things you can do if you don't necessarily have to upgrade to higher TradingView, but what you can do is you can open up a different tab. You can open up different tabs and you can put different indicators on, but that means you got to set them up like every day, and that can get to be a lot. So let's say you only get 3 indicators, you can open up new tabs and then set the indicators on your 2 screens, different tab, but you got to set it up each day. All right. So if that's a little nerve wracking for you, then, you have to do something different. All right, let's keep moving because we're doing good. We're doing good, but I got to keep us moving. That was fair value gaps. Okay. Trade management. Before you enter a trade, you need to determine what is your profit exit, the amount that you're going to have for your profits. If $40 is your profit exit, then there we go. Is it a dollar amount or is it a price location? When we were just talking about using the strat and for your entry and your target, if you know I'm exiting this trade when price gets to 6,900, then that's your target. If you say I'm getting in this trade, I see the big green candle is 68.95. I'm exiting when it gets there, then that you need to know that ahead of time. Also determine what is your stop loss exit. Is it a dollar amount or is it chart based? Are you exiting based on 3 times your premium, 4 times your premium loss? That's your exit. Or are you exiting based on a reversal, or based on VWAP being lost, or based on what I just said with the strat? If you entered based on a combo, are you exiting based on that? But you need to know this ahead of time. Okay, so that way, once you enter your trade, you're waiting to see that it does one thing or the other. You're not in the trade like, let's just see what it does. No, you got a plan on the front side. What am I doing here? If I'm getting in this trade, I'm exiting when it goes here, money-wise. I'm exiting when it goes here, loss-wise. Decide how you're going to exit. Are you exiting with a PDT hack? And if you are, how? Do you know how? And if you're exiting with a buy to close, are you prepared? Are you prepared to use a day trade if your account's not big enough? Are you prepared to buy to close if your account is big enough? What are you buying to close at? What's your plan? On the front side, we're doing this before we enter the trade, not while it's going on, and then we can't think because we're nervous, right? During the trade, this is trade management. So beforehand, we got our plan in place. During the trade, we're watching the gamma for proximity to the big green or the red. What is the price actually doing while we're in our trade? We're watching the candles, right? We're saying, what is the price actually doing? Watch how price is acting around VWAP. Is it going towards VWAP? Is it going to reject off VWAP? How's it acting towards the gaps? I think it was Thursday. I was in a trade Thursday afternoon. Price started falling a little bit, and I was in a trade in a PCS, and I was like, okay, It wasn't close to the gap at the time, but I saw it coming down, and I said, I'm exiting this trade because I knew if SPX it was Wednesday. If SPX got close to that gap, it was going for it. So I was like, I'm not going to sit idly by and hope that this trade makes it. If SPX gets in the gap, it's going to get some of it. And I knew that, right? So I was like, we're getting ready to bounce with a small loss. We lost $30. This was a copy trading account. That's because I know if it breaches the gap, the gap edge, I knew it was going to go in there and get some of that gap. And I didn't know how much it went. And if I had stayed in that trade, it went right through my strikes. But it was in power hour. So now I knew time proximity. I knew that it was in a time where price would keep going, which is the power hour. And I knew we were in a gap, and a gap is a volume imbalance. I knew it was going to try to get as much of it as it could. SPX, she can be bad news sometimes. I was like, I'm going. So I had a plan on the front side to say, okay, well, if it goes too far, I gotta go. I can't sit here by hoping it do right. How is it acting around your fair value gaps? Again, we talked about fair value gap edges are support and resistance. If it goes into a fair value gap, it will most likely fill it and then pull back out. Or if it goes down, it'll fill it and pull back out. But you want to watch and see what it actually does, because it may fill it and stay on the other side. You want to know that, right? This is the things you need to do while your trade is going. And then make your move. If you knew you were exiting with the profit, close it. If it hits the stop loss area you've already predetermined, then you close it. Break even. Break even is a win. A win is a win. A win is a win. Okay. This is a little bit about Magic 8 Ball, trade management, talking about using this information to get into your trades if you so choose. If you decide I'm picking a Magic 8 Ball time to trade with, you've got the pieces and the parts here to enter your trade based on Magic 8 Ball if that's what you're choosing. But again, even if you're choosing Magic 8 Ball as an entry, you still need to have a plan for how you're exiting. Are you exiting with a certain amount of profits? Because Magic 8 Ball still needs to be bumped up against the chart. It, in my opinion, strong opinion, it is not a standalone, right? Magic 8 Ball does have best times. I go through the data that Magic 8 Ball provides, and I pull out the best times for us. Magic I have best times for us, or that I've put here. This is in our Telegram chat, right? So you can use this on any given day. I got you the overall best times: 105, 12:55, 1 o'clock. This is for verticals. Each day there's best times. XSP, if you're trading XSP, there's overall best times, everyday best times. And then there's every day if you just want to look at certain days, best times. Okay. This is in our Telegram chat. It is pinned if you want to use this, to use Magic 8 Ball. But I still strongly suggest that you bump it up against the chart. All right. It just kind of gives you guidance. This is where I did give the link. I'll put it, let me grab it real quick. Nope, not there. I'll grab it. That way you can, I'll put it in the chat if you wanted to go and look at it. If you wanted to go, they do give you, I want to say they give you a free month. You can go and poke buttons and check around and see what's what. You can go there and look around for a month, see if you like what you see there, how it works and everything. The guy who runs it, Brian, is a real down-to-earth dude, okay? Why should we use the PDT hack? The PDT hack helps you to lock in your profits so you don't have to watch your trades all day. Many people use the PDT hack, lock in their trades, and they go on about their life. It saves your day trades if your account is less than 25,000. It regenerates your buying power. So once you're in a trade, once you PDT hack it, your buying power is given back to you to do whatever else with. You want to trade some more? The PDT hack saves your day trades and gives you your buying power back. You enter trade with the trend. Use the exact same strikes on the other side. Set your profit of $40 or whatever plus the max loss from the first trade. Set your stop loss of premiums received times 2. Subtract that from 500. That's your stop. Okay, so now we were talking about stop loss limits. I'll hit this real quick. Let's say that you are in a trade and you collected $70. You collected $70. That means your max loss, right? Your max loss in this trade would be $430. Okay. If you got $70 in premium, your max loss would be $430. Let's say the price starts to go against you and you're like, I need to go. I want to use a PDT hack. It's going to be a loss, but I want to use a PDT hack, right? You can subtract from here. Maybe you exit your trade here for 200. You do the other side of the trade for 200. Maybe this was a call credit spread. This is a put credit spread. Exact same strikes. You put in 200. Okay. Your max loss was 430. But now you add 200 back. You put 200 into that box. This means your loss now, you now have a loss of negative $230 instead of the max loss of 430. And that's because you collected $200 from the second trade you put on. It's a way to reduce your loss, to keep you from max loss, and it keeps you from using a day trade. You're closing this trade. You're getting some buying power back. You're getting $200 back, and you're closing off that first trade to allow you to go on to trading. You're locking that one up. You don't have to sit idly by for the whole day and wonder if it all does well or pray and hope it all goes well. You're locking in a smaller loss. And you could even, I mean, it could be something smaller. Maybe you know that it's turning back and it turned back quicker. Maybe you identified that it was turning back and it turned back and it turned back at $4. Maybe you knew early enough that okay, it's real. I'm not even gonna wait. You take in $400. This is a minus. That's a minus $30. Right? It doesn't have to be hundreds of dollars. That's like, we definitely should not be hoping, but sometimes we do. Sometimes we're guilty of hoping it all works good, right? But maybe you identify very early that it didn't go my way, right? Your stop loss could be a 2x. Perhaps your stop loss is 2x. You're saying, okay, I took in $70. If the price gets down to a 140, and I think I have a spreadsheet. I know we have a spreadsheet for the stop loss part of this. If you know you got a 2x or 3x that you're doing for your stop loss, maybe your stop loss is 140. You're like, okay, well, I'm losing no more than $70 more, right? You can put in some, you subtract that, and that's what goes in here. Okay, what would this be? 360? Yep, 360 means I'm losing $70 of my money. All right. So as you set your plan in place, you can use the PDT hack as your stop loss, right? You don't have to sit idly by hoping for it to do what you want it to do. I just would say, I don't want you to be so hard necessarily on a 2x, 3x. It would be better if it's chart based. But generally, if you get to, I'm getting ready to talk about which things are exit criteria. I'm getting ready to hit that here in a minute. Actually, I'm getting ready to hit it right now. So here's a PDT hack example of a win versus a loss. Lock in your PDT hack for profits if you can. I got a YouTube video. Let's see if I can grab this. So that way we've got more than enough PDT hack videos, but here is one. Control C, putting it in the links, in the chat. Okay. We're doing good. An hour and 48. We're cruising. Gamma exposure. We talked about that already. There's two types of gamma exposure information that's found in Magic 8 Ball. I know this is a lot, but I've told you I was going to run the whole strategy of what we look at. Here's an exit criteria. Let's talk about exits now. We're still moving to the next thing. You want to target profits first, not just max profits. Base target, 30 to 50% profit somehow feels like it's a little low. I know, and I have a hard time with this one. If you hit 50% within 1 to 3 hours after entry, you should seriously consider locking it in. Okay, that means if you took in $70, you should close it at 35 or 40. Especially if it's in the first 1 to 3 hours. Because y'all know dealing with SPX, she can turn around on you when your $35 turns into not that. You know, don't feel bad for leaving money on the table because you're building repeatable money. This goes back to closing off your PDT hack, taking your $35 or $40 and compounding it. Okay. Exit when gamma wobbles. If gamma starts to shift dramatically against your side after you enter, then start watching your exit. If total GEX dives sharply negative intraday, assume the price may start wandering wildly. Protect your green. Another good one. If you were going towards a big green bar and price turns back on you, find your way out. Double tap rule for quick spikes. When price surges strongly into your safe zone and contracts crush fast like you had today, which is a different day, then lock in 50 to 70% of your profits and sit flat. Don't wait for just a little bit more, $5 more. If you got your money, go ahead and take it off the table. If a news event is coming, take your money. We always talk about this. If FOMC is coming at 2 o'clock and you are in good shape, close your trade before the possibility of volatility goes nuts. If you're 60 to 90 minutes from the close and you're profitable, lock your bag. Please avoid the 3 to 3:30. Oh my goodness, that 3 o'clock to 4 o'clock shenanigans, and they are shenanigans. Just let's close some stuff off, okay? Exit criteria that we put together. A confirmed reversal on a higher time frame. If you are in a trade and you were doing something that was bullish and you see it confirmed turn back like a good turn reversal and your trade could be in jeopardy, go ahead and close and lock your PDT hack. Yes, your legs may be fine, but what if they're not? It's because as price starts coming towards them, your premiums are going to start to go up. So where you could have closed it with a certain amount, if it starts coming towards it, your premiums are going to start going up, and that's not what we want. Just lock in your profits. A 15 to 30-minute candle close beyond your short leg. And I added this extra because before we didn't have the 15 to 30-minute close beyond your short leg. If your short leg, your sell leg is breached and it's past their 15 to 30-minute candle close, then go ahead and close your trade. A breach of both legs, a definite close of the trade. No more of us holding it, hoping it returns, it goes back. Just close it and trade to get, trade your way to mitigate. A loss or gain of VWAP that seems like it's going to hold, go ahead and close the trade. If the buyback premium becomes over $300 or the PDT premium is less than $200, you should buy it back. You should PDT hack it and be gone. If the premium is 3 times what you received, so if you got 50 and it gets to be worth 150, then exit and use the time you have left to go and get that extra $100 back. Even if it's early in the day, it's up to you though, Sandra. If it's early in the day and you strongly feel like it's going to have the time, then fine. But think about it like this. What if it's 11 o'clock and your trade is breached? Do you want to give SPX 5 more hours of mental space in your head when you could just close it and trade other things and use that mental capital to put other trades on versus you giving SPX mental capital of worrying about that one recovering? Yes, you could do either one. But I have found that for me, if I just close that first trade where I quit worrying about it, then I free up my mind to go find better trades versus worrying about whether that one is going to do right. Because usually when I'm worried about whether that one is going to do right, I don't go do other trades. I'm too busy thinking about that one. But if I close it, then I go ahead and go find other trades to do. I'm like, well, this one didn't work. I close it and then I go find other trades and my mind is free to think about other things than other trades. But if I stay in a trade, I look up hours later, like I could have been trading all this other stuff, but I wasn't because I was thinking about that one. That's just what happens to me. Anybody else concur? Okay, when both legs are breached, is it at max loss or less? It's generally not at max loss. If it's earlier in the day, if it's during the day, both legs being breached won't be max loss yet, unless it's like breach. But you got time, but you also you have indications and signs. You don't have to wait for both legs to be breached before you close it. You see that happening, right? If you're watching the chart, if you're not watching, of course, you won't see that happening. But if you're watching the chart, you see the price going right on through your strikes. Like, close it. Just close it. But yes, but no, it's not max loss earlier in the day. You still have there's still some premiums in there you could get if it's not in the 3 o'clock window of time. Usually if it gets later in the day, the premiums are going to be eaten up. Okay. Definitely try to exit your trades by 325 or 330, win or lose, break even, because we know that the 330, 345, 350 SPX goes bananas. And if your good trade is good, you definitely don't want to still be sitting in a good trade. If you can help it, then okay. So now I'm gonna talk a little bit about risk management. We're almost done. I'm very close to being done now. Then I want to show y'all some back testing stuff. I'm doing good. I'm a little less than 2 hours. Let's talk about loss management versus win management. I have found that most times we're looking at the wins. We're not considering the losses. We usually don't start with the loss in mind. That's just human nature, and I get that. But we need to be managing loss management. How much are you okay with losing? I mean, realistically, how much are you okay with losing? That's where your trade entries and your risk management should start. How much are you okay with losing? Okay, this is a different mentality. Stay with me here. How much are you okay with losing? Whatever you're mentally, emotionally, and financially okay with losing has to be your exact risk. That is the stop loss or the amount that you trade with. If you're emotionally okay with losing $100, that has to be your stop loss. If you're emotionally okay with losing 150, that has to be your stop loss. If you're emotionally and mentally okay with losing $50, that has to be where you have your stop loss. Maybe it's 500. If your risk tolerance truly is $500, then then you should trade your one contract and you let it go, right? You can do your one contract, let it go. You maybe do two contracts, and 250 is your risk tolerance, right? But that you have to start with the loss in mind. Not the wins, not the wins. We got to start with the loss in mind, and that's where we put our stop loss. Okay? Risk management is bigger than just stops. It's not just close if our stop log, our short leg is breached. It's capital risk. How much money is exposed? That's why I was telling y'all, if you got less than 5K, you're trading one contract. Because if you're trading 2 or 4, that's how much money is exposed. Structural risk. What's your trade structure, your strikes, how many days to expiration? Correlation risk. I'm going to talk about all these. This is where multi-tickers are included, or your emotional risk. Silent account killer. Okay, correlation risk. Trading multiple tickers in the same direction does not equal diversification. We'll be like, oh, I'm diversified. I'm trading multiple tickers. Where if you're trading all these things, different tickers, but they all comprise the same stuff, and you're trading them in the same direction, you are exposed. If we're trading SPX put credit spreads, XSP put credit spreads, triple Q, IWM, you're doing put credit spreads on all these, basically you're oversized. You're expecting all these things to go in the same direction. That's one big trade. That's not multiple trades. If you've got one call credit spread, one put credit spread on SPX, and you've got 5 put credit spreads on XSP, you have $1,000 going in the same direction. Now, if you got one contract of PCS on SPX and you've got 5 call credit spreads on XSP, then you're in opposite directions. That's 2 different trades. That's different. But if you got both of them going the same way, that you doubling up the money. All right, so that's correlation. Or if you in SPX put credit spreads and you in NVIDIA put credit spreads, NVIDIA is a big part of SPX. That's the same directions that you got to count. That is one big trade, right? So if NVIDIA falls, then SPX is going down too, right? So you got to keep that in mind. That's one big trade that is hidden leverage. If multiple tickers would all lose money on the same market, then you got to watch your sizing. We were talking about sizing. You're like, oh, I'm only in one SPX, but I'm in Amazon, Google, and NVIDIA all going the same way. That's one big trade. That's all risk in the same direction. Okay. Emotional risk management. This one kind of got me. This one made me think. Emotional drawdown often precedes financial drawdown. We don't think about this one, do we? When we're emotionally not ready. Maybe we've taken some losses. Maybe we're distracted. Maybe something else is going on in our life that ain't got nothing to do with trading. Or maybe we've taken a loss today, but we're now trying to get our money back because we're feeling bad about the fact that we've lost today, or we lost yesterday, or whatever. But when our emotions draw down, generally our trading and our decision making draws down. Emotional risk shows up as overtrading after a red trade. Let me just grab one more. We don't make good money in the morning and we want one more. Before you know it, your good money in the morning tosses out because SPX goes ballistic. Revenge sizing. Now, mitigation is one thing. I lost money on my trade. I went and looked and did a full assessment, and I mitigated that loss by a full, proper assessment, not just pushing buttons and knee-jerking some more trades, but I assessed and accurately got back in based on entry criteria. That's right. Revenge sizing. Oh, I lost money on this one. Let me go do 2 and 3 contracts on the next one. That's not the same. That's not the way to do that. Ignoring your time rules. If we said 3:30, the power hour was not the time, then that ain't the time. Trading outside of your gamma windows. If your decision quality is slipping, your risk must immediately come down, even if the setup is valid. If you already know that you're not in the space to make good decisions, you got to size down or bring your risk down. Emotional risk management. A red day, you might want to cut your contracts in half the next day. If you trade at all, maybe you go into your sim. If you got a big win, don't size up immediately the next day. Oh, I balled out yesterday. Let me double up tomorrow. No. If the price action is confusing, then maybe you sit out. Or you go into your sim, or you wait until we get a clear signal. That's good risk management. We found that to be the case. SPX stay in the opening range too long and we get impatient. So we jump in something. Next thing you know, it pop out the opening range and you like, oh, wait, wrong way. Wrong way. Okay, time-based risk. Subtle but critical, especially for those who are doing 0 DTE. We've got fixed entry windows. We really try not to get into anything before 9:45 because we don't have a clear view. We were doing our little 9:45 trade thing. That didn't hold up for me. That did not hold up for me. That was way too much stress for $30. Plus, not after 3:30. For me, the trades after 3:30 cause me a level of anxiety I'm not interested in anymore. Definitely check your gammas. Give gamma a chance to situate. Give VWAP a chance to give you some, let the opening range, all the things you need. On it's data based as far as time. If we know we got FOMC days and bond auction days, let that time stay away from those times. It's going to be heavy volatility. And if we got magic 8-ball best times that we like, then trade with those. Okay, so watch your time based rules as well. All righty. All righty. Do we have any questions so far while I go to the chart and look at some back testing stuff? Anybody want to open their mic and ask some questions? We're good. Okay. I'm going to go back. I'm going to do some back testing of the opening range breakout because I want to show you all some stuff with the opening range breakout. We're doing good. We've been 2 hours. I'm proud of myself because I'm good. I think we're good. I hope you all have gotten a lot out of what we've been doing. Okay. We talked about Friday already. I want the 30-minute chart. Okay. 30 minutes. I'm in the middle here. I'm going to show you how this opening range breakout can be run every day and when you need to let it go and how you can work it if it starts to turn against you. not VWAP. I didn't want that. I wanted distract. Yep, that's what I wanted. Okay. I went back. This is the 31st, which would have been Wednesday, right? Y'all still with me? Y'all still with me? Val says great info. Replay will be available tonight. As soon as it uploads, I'll put it back into the chat. It usually gets ready the same night. Great. Val said, James, I needed a refresher. That's okay. We're still good. We're still good. We're still good. I love it. I love it. I love it. I know it's a lot, and some of it may be confusing if it's new to you, especially like people who are new to our group and our chat. But just know this is all gonna make sense to you. Just keep riding with us. I will get to Tradier, so y'all make sure to remind me that if I forget, make sure to remind me to open up Tradier. Okay, so this is the 31st. Look in here, the 31st. This is the first opening range candle, right? This candle, this is the 30-minute chart. Once it breaks out, right here, let me go to black. This would have been the breakout right here. You would have done a call credit spread above the opening range, 6,900 maybe, 6,900, 6,905. Price never did come back up there through the rest of the day. You could have done your PDT hack. It did come back into the opening range, but if you had done 6,900 or 6,905, however, you could have done that as a call credit spread and price went down. You could have PDT hacked it and got your 40 or whatever amount of dollars you wanted. Actually, I still might want VWAP turned on because I want you all to see how price does function around. It came right up above VWAP and then went back down again. Okay, that was the 31st. It worked it off on the 31st. Okay, I do have a day. I'm going to get to a day where it did not work as well, and I'm going to tell you exactly what you would have done in that case. Okay, so this is the 30th. This is the 30th, right? Opening range, 30-minute opening range. We got our candle here, candle here. I'm going to show y'all exactly where I'm at, so y'all keep paying attention now. Okay. This is the opening range candle right here, right? Price never really broke out. It did a little bit of a break here. That ain't really a lot. It stayed in the opening range all day. It never left this opening range. Now, where this is dangerous is it's going, and as it's doing this, price action is doing this. What we would do here is do an iron condor. We would do a call credit spread here and a put credit spread here. Now, where it gets dangerous is as the day is progressing, you have to get closer and closer because the premiums aren't there. So you get nervous that will it start to break out? This might have been like Monday or Tuesday. The 30th was Tuesday, right? It might try like it wants to break out. So you're scared to get a little close, but if you make sure you get outside of these ranges, and then you just watch and pay attention. And when the theta decays, you can exit. With theta decay, not so much price movement, but this is a good iron condor day. But you just never know with SPX if it's going to break out. So you got to pay a little bit of attention. But this is a good iron condor day because price stayed in the opening range all day long. Okay, it never did leave the opening range. Okay, now let's go to the 29th. 29th. Opening range is higher, a little higher here, a little higher here. Get us our, this is the candle that was the opening range candle. Okay, it broke out to the downside, right? Broke out to the downside. That means we would now, okay, this is one of those days. Well, I think TJ talked about the first 15-minute candle being a doji. This 30-minute candle is a doji. It is not clear on which direction. Doji means the body of the candle is, there's no buyer, and so it's not clear which way we're going. So this isn't very clear which way we're going. So at this point, we probably need to give it a minute to see what we're doing here. In this case, it did break out to the downside. Finally, it took a while. So you could do a call. You could have done a call credit spread here, right? Price did come back. It recovered VWAP and went on up and came back down, and it closed still near VWAP. It closed here. Call credit spread would have worked. Once it reversed here, because it did a good little reverse, honestly, a put credit spread would have worked after that too. Once it went back into the opening range, which it did and never came back out, a put credit spread would work too. Once it broke out, call credit spread, because there was a lot of agreement here in that first candle. Okay, I think that was Monday. Okay, let's keep going backwards. This is the Friday after Christmas. Fridays are, I'm not a fan of Fridays. I reminded myself again this past Friday that I am not a fan of trading on Fridays. Okay, so the opening range is, the opening range candle is that one. Had a little breakout down here. It didn't stay down there at first. It came back in, but it finally broke out right here. This could be your second break. It went to the downside. Call credit spread. Again, this is where we've been over the last little bit. Call credit spread never did come back up there. Wouldn't have been, maybe not so much a good PDT hack because it didn't go down a whole lot, but the price never came back up there. So time would have helped you close that trade. Now I'm getting ready to show a put credit spread one. Bring these down. Okay, so opening range, this candle here. Okay, this is the candle. That's the opening range candle. Price broke out to the top side. Right after the next candle. So this was the 9:30 candle, 10 o'clock. Soon after 10 o'clock, this candle is out. You would do a put credit spread, riding with it, going up there. You could do your PDT hack. Price never came anywhere near under. Notice I'm outside of the opening range. You're putting your strikes beyond it, even though you might think your premiums, these premiums ain't enough. Be safe. You'd rather be safe than sorry. I'd rather take $50 down here than take $90 someplace else and be worried that the price gonna come back and get me. Right? Take your $50 or whatever you're gonna get and be comfortable with that. Okay, we'd rather be safe than sorry. All right, y'all see what's going on so far? I wanted to get to one. The same thing happened here. Price broke out, opening range, broke out to the top. Same thing would happen with this one. This is the candle here. Price broke out, going to the top, broke out a bit. I want to get to the one where it came right back in there, and I'm going to show y'all what. Now, this one had a monster candle. It did break out a little bit, but it broke out and sat here. There's your can. This is the opening range. It broke out, but it just kind of broke out and sat there. So time decay. This isn't one that would get you a PDT hack too fast because price sat here after it was gone. So time decay would have to help you with this one because the price isn't moving. It's just sitting. So time is helping to decay that. Okay, let's look at this one. This is where some fear would have worked on us. Okay, here we go in the middle of the screen. It would have worked, but it would have been scary. All right, so price broke out to the top side. right? We would have done a put credit spread underneath here. Put credit spread. Put credit spread would have been underneath here somewhere. But y'all see how this price comes right back down to the bottom of this range? Probably would have gotten 67.60 or 67.65, but price was right at it a couple times. Our guidelines have told us that if our short leg is breached, right, we go. If you had 67.60, 67.65 put credit spread, the price came to that a couple times here and here. It didn't close there. It ended up closing at 67.70, right? It closed 67.75. So the trade would have been fine, but it would have been uncomfortable. It would have been uncomfortable. So now, can you pull the trigger? Can you pull the trigger to close your trade? Can you pull the trigger to close your trade? Because once it reversed here, this reversal right here. Where's my pencil? Hello? Oh, there we go. This reversal right here and this monster candle, that would have been a shakeout. Oh, where we going? But then this one here would have made you think we're okay. I'm okay. And then it would have hit right here, these tweezers, and fell back down. No. Ooh, woo, 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 woo. That would have been scary. Would have been scary. The strat assistant would have been scary. The trade would have worked out okay, but according to our exit guidelines, we probably should have exited this trade earlier. The emotional roller coaster, Val, it would have been so bad. So bad. It would have been an emotional day. Again, it would have worked out, but it would have been a long day because it did break out to the upside. But it would have been right at your strikes. Most of the day, it would have come down here twice. And it, again, barely closed in the right place. But it would not have been comfortable. This is a place where you, according to our guidelines, really should have closed this trade. And then you could have done a call credit spread up here. Once you got the reversal here, you really could have done a call credit spread up here and left this PCS alone. But yeah, it would have been harder to do because you would have wanted to believe it was going to act right. Okay. Let's go on to some more. I do have one I know I want to show you. Where is it? I got one I knew I want to show you. I looked ahead of time so I could make sure I had a good example. Is that it? I felt like it was December the 2nd. Let me make sure I got because I wrote it down. Yep, December 2nd. Wanted to make sure I did not forget it. Okay, so here we are, December the 2nd. Let's assess how would we do according to our guidelines and our new rules, or they ain't really new rules. They're reminder rules. Okay, here we are, December 2nd. Okay, so now hits here, it breaks out a little bit to the downside, but it doesn't stay out there. This candle goes up and breaks out to the upside. It doesn't stay out there. What do we do? What do we do? Let's see. I'm gonna do something. Where's my replay? I'm gonna replay us back to there. Yep. What if we're here? What are your thoughts? If you were here, December 2nd, price, this is opening range breakout. This is the opening range. It dipped out. Red candle comes all the way back down. That means this candle actually, that's what we got. Let's start here. This candle goes up. It goes out. This next candle goes out. It actually opened here. It opens here. It goes up, 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 up. That's what happens. That's how this candle is forming. It opened here. It goes up. It climbs up, climbs up. It's nice little green. You thinking, oh boy, we on our way. It's green, 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 green. All in this 30-minute. And then after a while, it turns back and comes right back down. Boom, 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 boom. It goes to right here. And then it comes right back up again and it closes right here. Okay, let's look at the 15-minute. I see a note in the chat.
I would have entered a CCS there.
You would have entered a CCS on the 15?
No, I'm sorry. Did you mute me on purpose? Should I be quiet? Yes, see, you muted me. No, I'll keep quiet then.
Coach, you're muted. Coach, you're muted.
What did you say? Maybe
When
we're
you,
all getting muted.
my bad, you was on the 30, and then I saw it take the top and then close at the bottom. So I would have called that the second breakout when you had the three strat. The red candle was a 3 on the strat.
Uh-huh.
I would have called that the second breakout. I would have put in CCSs there.
Okay.
You were doing
So-
bar replay there, and it kind of, I think where we're at now. Yeah.
I'm on the 15
No,
now.
that's the 15 though. Were you on the 30 before? Or am I
I
tripping?
was, and now I changed it to the,
Okay.
because somebody said put it on the 15. So
Oh, okay, never mind. I got you.
where's my pencil? Oh, there it is.
I mean, technically it hasn't broke out yet, right?
Yeah, it broke out here, but it didn't stay out, right? So it on the
Right.
15, it broke out, but it didn't stay. And then this one, it opened here and went up, but it didn't stay out there either. It came back in. So it's really not a good breakout yet. Now, if you don't, because I think that like when TJ does the 5, does the 15, then she'll go to the 5. Now, if you go to a 5-minute chart, according to the 5-minute chart, it's out. Right? If you go to the
Yeah.
5-minute chart, it's out of on the 5-minute chart. So TJ, what are you thinking right here?
Hey, Arlissa. Yeah. So, I didn't see the first. Was it a doji that 15-minute? I'm so sorry. What did the
Okay.
15-minute?
No problem. Let's see what
Kind of
that
working
15. So,
backward there. Yeah.
I am in my class.
so this is the 15. This was the 15-minute. So not quite a doji, not really.
Nope, it's not a doji. You're
Would you
right.
call
So I
this a
would've-
doji? Yep,
No, ma'am. You're right. I wouldn't have. I probably would have got psyched out this day. I'm gonna be honest with you because then you went to the 5 and it was out, right?
Mm-hmm.
Yep, I would have
Mhm.
looked at this and said, okay, I'm going to the 5. And that first
Mhm.
closure above, I probably would have put a put on this one, guys. I'm not even gonna
Mhm.
lie to you.
Mhm.
Yep, right
Mhm.
there, I would have entered. I'm not gonna lie to you.
Yeah, yeah. And then this is a hammer. So it would have looked like, I mean, honestly, you wouldn't have been wrong if you were, if according to what you do, TJ, you do the 15-minute and then you go down to 5. If that's what you do, that strategy works for you more days than not. According to what I see in this chart, this all says it's still got some green. All these long wicks, wick, all this says is going up. All this right here still gives up indications. Then this 1020 candle says, I don't think so. And none of this here gives, I'm getting ready to drop energy. Okay,
Right.
so none of that is said. What does a good breakout look like? It's just looking like this, like it's going, like you want something that's outside of the range, and it's doing this, right? Which is one reason why I like the 30. But again, we always want to have a strategy that works for our own sensibilities, right? So if we were on the 30-minute, this would be our 30-minute chart, right? We got a nice set of a wick up there, but that wick is, again, we're on the 15 now. 15 says we're going up. This is giving up energy. These long wick right here says I'm going, it's not all the way out on the 15, but according to the strategy that is used, it's given like it wants to be up. Then the 10, 20, 10, 15, 10, 20, it says, nope, I don't think so. Okay, so the same candle that tells us to enter, right? This is where we would need to pull the trigger to say, I gotta go. Now, this will be hard because it's 10:20 in the morning. So you're already in. If you used this candle, if that was your entry candle, then the bottom of this entry candle would need to be your exit candle. The bottom of this same area should be your exit, right? If this is what you use, if this was the guide that said, okay, if it breaks out going to the top, then I'm putting put credit spreads under here going because I believe it's going up. When this candle does all this foolery right here, then this would be your notification to say, I may need to look to reposition. Okay. I may need to reposition because now I'm getting some other energy that may not be. Okay. So let's go to our next candle forward and see what happened next. Because see, these days are real. We know. Now see, look at this. Next candle, it decides I'm ready. But what did it do before it got ready? All this right here happened. It opened. This candle opened right here. Come on, pencil. Stay with me. This candle opened. Ay. Here we go. It opened right here. And it went down first. So there was a lot more red to look at before there was any green. It opened and dropped all the way down to 68.23. Right? So if you were here, now that would give you, if this opened and went red, that now says we're breaking out to the downside. This is now our second break. So now we're in call credit spread energy. Right? 58, 45, 50. But if you haven't closed off this buddy down here, the one that you have for the put credit spread, your brain ain't hardly already at a call credit spread. You are still thinking about this put credit spread that is here at 10:20. You're still thinking that, oh my goodness, my put credit spread is in trouble. Which is why I'm talking to me too. So please, I'm not talking at y'all or teaching at y'all. I'm talking to me too, to say it's good for us if we can make our moves as quick as possible. Because if we had exited that put credit spread as soon as we could right here, we wouldn't have felt all the pain that went with that right there. Because that would have been pain and emotions. But most of us would have just sat there paralyzed. Me, I would have sat there like, what in the whole world? And then I'd have been like, it's only 10:30. It's 10:45. We still got all day. This is going to recover. And then it would start coming back up. And I'd be like, see, there we go. Y'all already know. Oh, 68. Sorry, that should be a 6. That should be a 6. Sorry. Yep. Thank you, Delisha. Okay. All right. So now let's keep looking at what happened. All right. So the put credit spread, we would have got potentially any of us would have gotten fake down the top, would have been a put credit spread after it recovered, maybe. But then now, look at there. But now, once it did this dropping and to put a call credit spread on, now the call credit spread look like it's going to be in trouble. because this green candle is coming up so fast, right? So then here we go. Next thing, next candle. What happens? Oop! Oh Lord. Now we back outside again. Oh, we back inside. What in the world? Where we going? What are we doing? Oh, we back out to the downside again. Put credit spread in trouble. Call credit spread. Okay. Going back up. What are we doing? What are we doing? What are we doing? It don't know. It don't know what it wants to do. It don't know. Mm-mm. See, our emotions would be going all the ways right now. Why is that? Because we would have had, first of all, there was a put credit spread, which would have been most likely underneath here because we had what, maybe 68, 20, 25 would have been your put credit spread based on going to the top. And the call credit spread I just said would have been 68, maybe 45, 50 based on that drop. Now this one would have turned back, but it would have been uncomfortable till it did. This one now would have been breached. So if you had closed it back here, that would have been good, but it fell through it. If you still was in it thinking that this green candle would have saved us, if you thought this green candle saved you, this red candle would have let you know you weren't safe. And then this one really would have taken your emotions to the toilet. Then it recovered. You got a nice little set of tweezers and it recovered. Right, but you will be so whipped. It's 12 o'clock, 12:30. Emotions is in the tank. You ring me out. But now it's recovered VWAP at least. VWAP is recovered, but now it's 68, 45, 50. It's at 68, 36. It's doing all the things. What are we doing? What are we doing? Is either one of my trades safe? No matter what I'm in right now, is it Melba say call it a day. Risk management issues at that point. Exactly. Risk management issues. Risk management. I'm letting you know that this is of course y'all already know. I know y'all know we've been in these days. We've been in far too many of these days where we're like, what in the world is going my trade? No, I'm watching, can't do nothing else, can't concentrate on nothing, just looking at the chart, seeing at the ceiling. We just hoping it all goes well. We saying the prayers, we singing all the songs, and it probably expired right where it started. And all the things, but this whole day is an emotional roller coaster because we were in though right at 10:30 pretty early. If you did 15-minute entry for a 15-minute entry, you're in about 9:45ish, 10 o'clock, definitely at the latest because it broke out so early. And oh, let's see. I need to stop it now because I didn't want it to go that far. Let me go back a candle. So I want it to stop at the bar where it closed. Okay. So it closed at 68.28. 68.28. So the original 68.20.25 trade that TJ was saying she would have gotten into that based on that breakout at the top, that trade would have turned out okay. But look at the roller coaster ride. And the 68.45.50 that I would have gotten into after it broke out to the downside, that would have been okay. But look at the roller coaster ride. This price came up as high as 68.42 almost. So right up next to it, it would have been a ride all day. No matter which one of us was in a trade, it would have been a roller coaster ride. But this is a day I was saying all this to say, Delisha said I don't like roller coasters anymore. That on the opening range breakout, more days than not, it works out great. Some days we get a fake out, even on the 30-minute chart. Let's say we're on the 30-minute chart. This still is a fake out, right? even on the 30-minute chart, it still fakes you out because you've got the 30-minute. You've got the 30-minute. I'm going to widen up the candle, widen up this right here. That's the 30-minute. Yep. And still, it looks like this is the candle we're looking at. This one right here is our 30-minute. It looks like it goes out to the outside, and it does. It closes outside here. So this would let you think you were going with the call credit spread. I'm sorry, a put credit spread. Would have done a put credit spread under here. It goes up. Nice little set of tweezer reversal, drops hard. Not sure what happened on the second, but a call credit spread. Now, a call credit spread higher than this would have maybe 68.50 on the 30-minute would have given you, I probably would have went a little bit higher, 68.55. And it pulled back. This put credit spread. Now, I might not have even done the call credit spread because I would have still been worried about my put credit spread. I would have been, almost paralyzed with one side and not making the decision to do the other side. And then when this came back up, I'd have still felt like it was going to keep going. So I would have hesitated on the call credit spread side, even though now another entry is here for another call credit spread is here because it's another set of tweezers. And you got another set of entries for another put credit spread under here. So there would have been chances to get another put credit spread. But knowing me, I'd have been like, well, don't need another put credit spread because I'm still hoping this one ends up okay. Might not have entered another one lower. I might have just been like, well, let me try to go a little bit lower because this one may or may not make it. Let me go a little lower. But I want you to see that the opening range breakout, though on the days, most days it works out with no issues and no problems. Some days you can see that it will fake you out. Fake out on the top side. Kind of fake out. You got the call credit spread would have worked out fine, but it did come back into the opening range. It stayed in the opening range most of the day. Y'all see that? But you do have some reversals. You got some reversals you could work with that would have given you some more entries. Mm-hmm. Okay. All righty. Questions? Questions. Okay, I'm going to open up Tradier. This is why a newbie like me should do one unit at a time. It's got a little bit of time. You have to definitely have to put a little bit of time into it. Chris, are you still here? I can't even see.
Yep, still here.
Okay. Trying to see to sign into Tradier. Some people who are copy trading. Oh, it's going to my email. Want to see how to work Tradier. I usually use my phone more than not, but here's some a quick little down and dirty on this is the web based. Now they have an app like Thinkorswim has a computer app. They've got a few different things, and I like the computer, the web app. I haven't spent a lot of time. I haven't spent a lot of time in it, but this is, you can go to Tradier.com, in one of the tabs. You go to Tradier.com. Lisa, you still here? I know Lisa had asked about using Tradier as well. Okay. So let's say I have what's the thing called? An alert. Let's say I gave the alert call credit spread alert, 68.95, 6,900. Okay, I'm going to write it to the side here. Let's say I've got 68.95, 6,900 call credit spread. Okay, the first thing you need to be thinking about is which one of these is the buy leg, is which one is the sell leg, because then on here, you got to pick it leg by leg. On their app, you can pick it as a vertical, but here you got to pick it leg by leg. Call credit spread, remember the 68.95 is your -1, so it is your sell to open. And the 6,900 is your buy leg, so it is your buy to open. Right? So then you're going to up here to the top where it says chains. Tradier has chains, and you're going to pick SPX. Come on. Moving a little slow, sir. Okay. So if I was looking 68.95, 6,900 call credit spread. Again, you need to know which one is the sell and the buy. 68.95, 6,900. So 68.95. Let me get my pencil so I can show you exactly where I'm at. 68.95, 6,900. I am here. The 68.95 is the sell, and the 6,900 is the buy. I'm on the calls side. These are call credit spread. 68.95 is the sell. 6,900 is the buy. Okay. Then you're going to select send to ticker. Send to ticket. Sorry, not to ticker. Send to ticket. You click that. It brings up the trade for you to confirm that this is what you want. 68.95 sell to open, 6,900 buy to open. How many contracts do you want? Do you want it as a market? That's basically going to give it to you whatever the price is at the time. If you want to put in a limit price, you got to pick credit because we're selling, right? So if you want something that you know you want $50, you need to put that in there, or if it's whatever it is, you can take it as it comes. Good till cancel, pre-post. I just leave it on day because I'm day trading, but you can put it in there, and for whatever is going on, all of that should be written over here. Okay. There is some stuff that lets you know that over to the right, if I was doing it, markets close, obviously, but the middle credit is 125. The bid and the ask are going to be around that. So if I just push the button, if the market was open, it would give me this mid price. It's going to get me right around this mid price here. And then once you're ready, you would push, I think you got to hit preview first, and then you can hit submit. The way they make you, it makes you hit preview, and then you can hit submit. And once you hit submit, the order is going to sit in like a working place. I don't know if you can see it on here where they're like in orders. When I'm on my, maybe the dashboard. There it is. So after you're done putting what you want there, when you go to dashboard, it says this is the order. See, it's under orders. It's pending, and it says I've asked for $50, but it's currently worth $1.25. It says here it's currently worth $1.25, and it is pending. Of course, it's not going to do anything. The market is closed. If I wanted to make some changes to it, I would go here to this little gear shift here, and I could cancel that, which is what I'm going to do. And it would cancel that order. If I had some positions, if I was in some positions, they would be right here where it says positions. Okay. Now let's do one that is a put credit spread. So let's say I'm going back to chains. Put credit spreads is going to be a little bit the other way around because you got to remember whichever one is, you got to remember which one is in which order. So let's see let's say we're at 6,800, 6,805 put credit spread. Okay. Put credit spread. When you're at a put credit spread, price probably above that, that means the one closest to price is the negative one. So this is going to be your sell to open. And the furthest away is going to be your plus one. And this is your buy to open. Okay, this is going back to remember. Well, I think if you're doing Robinhood, you're kind of remembering some of this anyway, because Robinhood, you do pick them onesie on Robinhood. So now we're on the put credit spread side, and 6,800, 6,805, right? So 6,805 is the sell and 6,800 is the buy, and I'm on the put side. Once you got buy and sell there, once you're ready, you pick send to ticket. You got it here, 6,800, 6,805. If you want market, it tells you here that's worth 37 cents here, credit mid. If you're fine with that, you can change, leave it there. If you want something different, you can put, you can type in what you want. And then when you're ready, you preview and submit. Once you submit it, you go back to dashboard. And on the dashboard, you should be able to see up here at the top that I was asking for a credit of 50 cents. It's worth 37 right now, and it's still pending. Okay. Now this is Tradier on, when I went into a tab, I typed in Tradier.com in a tab. Remember, Tradier does have a YouTube channel, and that YouTube channel walks you through how to maneuver and how to use their stuff. I do a lot of things on my phone. Of course, that's not going to be as easy for me to show you. I got like one or so videos. I might have to find that video and send it to y'all. Because it's a little bit different on the phone. You have to slide your strikes to get to what you want to pick the BTO and STO to do it on your phone. It's a little bit different. What questions we got? Our copy trading and I think I mentioned this on our call, but our copy trading in our 3 weeks I've made $435 in the 3 weeks of copy trading. I'll say because I keep always wanting to say we, even though I'm trading my money. So I've made $435 and it's a little about 13 or 14% so far. Chris says, if you exit a trade alert early, are there also notifications? If I exit, yes, I do. When I exit a trade, I send an alert that says close this, or I've closed it at 480 or 490. I'll say I closed it. Or if I close it at a loss, I'll say I'm leaving this trade. I think it might be fine or whatever. But I put a message into our chat also. Yep. Rajiv says, if I trade SPY 0 DTE and buy and sell puts and calls, do I run the risk of getting assigned? Not if you're buying and selling. If you're buying and selling calls and puts, not really. When you're buying and selling calls and puts, I mean, you trade it with your money. So you You either make money or you don't. Buying, not so much. The assignment piece is a risk when you're selling. So nope, if you're buying, nope, you don't run any risk of assignments and stuff like that. No. Decombi says, do you plan to make the same trades in copy trading as you do in the seller zone? So, like for example, on Friday, I made my seller zone trades were one of the trades that I made in, is this it? Yeah. On Friday, one of the trades I made, I'm not sure if you can see, it's kind of small for you, but one of the trades I placed in the membership was a Tradier trade. So one of the trades was also given as an alert. But you see, there's other trades here that I've made that are not made in the copy trading. So I made other trades. You see, I got 68.05 and 10, 68, 15, 20, 67, 95, 80, 1800, 68, 95, 6900. There's 1, 2, 3, 4, 5 other trades. 6, 7 other trades that I made that are not in copy trading. So I'm not trading. All of the trades I take are not happening in copy trading. First of all, the copy trading account can't necessarily hold all the trades I take. So that account has $3,000 in it. So it's not going to hold all the trading that I'm going to do. Plus, that's not what it's designed to do. So no. But generally, the trade I take in copy trading, I also alert that in the membership because it's a trade I've taken, and I alert the trades that I alert in the membership are trades that I'm in. So if I'm in a Tradier trade, that I'm in it. So that's how I work. I do that. But all the trades I take won't be in copy trading. No. And I think that was the question. Chris says, to close a trade in Tradier, are you just selecting cancel in the status area? If you have the credit set to 50, does the trade auto close when this triggers? Okay, so if I'm in Tradier and there was a trade here, let's say something was in positions, I can either, if you've got over 25,000 and there was something here, there would be this, not retrade. If you were down here in positions, there would be something here and you could pick and then you would basically close it. You would do the steps to close it. When I do a PDT hack, I take those exact same strikes. Like I would take these same strikes over here to the right and I would do the opposite. So let's say I got this trade here, this put credit spread trade, and I got $50. Let's say I did get $50 in this trade and I wanted to PDT hack that trade. Then I would go to the other side. I would place another trade, which is 6,800, 68.05. Sorry if this is really junky looking. I would do 68.05 call credit spread. I would do the exact same trade. This becomes the plus, this becomes the sell, and this becomes the buy. And I would put in 495. Okay, that means I'm going to now keep $45 minus the $10 that we pay in fees. So I'm going to keep $35 in profits. That's the way I do the PDT hack in Tradier. I place one trade. This is trade number one. This is trade number one. That's first one here. And then I do the exact same strikes. This is trade number two. And basically that locks trade number one. So the $50 minus, well, it's $450. For $495 minus $50, there's math there, leaves $45 minus the $10 in fees, means that there's $35 we keep as profits. That's how that goes. But because we're just not closing them. I mean, some days I have just closed flat out and use a day trade because there wasn't maybe enough room for us to put a PDT hack on, or I didn't want the time for the PDT hack to pick up. So I've done that a couple times. I don't really like to use our day trades, but sometimes it can't be helped. That's what you got them for. So I will close them, but you can select them in the positions tab. You can use if they were here if you had trades going, they would be in the positions area, and you would use this little gear shift thing here. There would be one here in the positions area, and you could just close the trade. Basically, you would buy to close the trade, or you could use a PDT hack and close it without having to use a day trade. Okay, to close a trade in Tradier, you just select and cancel, but not cancel. You want to, it's called, I think it says close. And then you want to close it. You're going to buy it back at whatever it's worth at the time. Okay, so you would buy it back for like $5 or $10. So if you sold it for 50, you would buy it back for maybe like 10. You know, you buy it back for 10 or buy it back for 5. You buy it back for something less. And the difference between these two prices is your profit. That's how you do when you buy it back. Okay. Yes. So no, I don't make the same. I'm not making all the same trades in the membership or the copy trading as I do in the membership. And I probably never will trade them one for one in both places. Yeah. First of all, the copy trading account is not at the size to trade the things I trade in the membership. Could you explain one trade in statement? What do you mean? What one trade in statement? Could you explain one trade in statement? I don't see what are you talking about? What are the different numbers? What different numbers?
What I mean is in Thinkorswim, it's a different way they put everything can be seen, whereas in Tradier it is a little bit different. So if you would just explain that one line on or one trade with what are the different numbers?
Under statements like here?
Yeah, the statement they give you all the details. So if you could just go through one line.
Okay, let me see. I'll see what it says. Honestly, I've never looked at this, so I'll see what it shows. I have never taken a look at this. I keep track of the. Let me see what it says on the screen. Okay. Okay. And I may not be able to, because again, I've never seen it myself. Where are we? Where'd it go? Okay, statements. Where'd you go? Where'd you go?
If you maybe change it to the date to December 2025.
That could be true. Let's see. Okay. Oh, 2025. There we go. December. There we go.
Yes, one of these, I think.
Okay.
How do I understand that? There are a lot of numbers here, like.
Okay, so I'll go through what I see. Okay, so it looks like at on 12/1, let's go to something that you actually saw because we did 12. Well, what's our most recent one was what, the 12/31. It's a bunch of fees.
Yeah, that's what I'm not understanding. What's to be added, what's to be subtracted,
Okay,
and how
well,
do
we do
we?
know. Okay, let's look here. Well, I'm on 12/31. So this is the date. This is the date that there was a trade, right? Um, looks like I bought, or there was a bought thing here, and you got the date, you got the settlement date, right? It tells you that you bought a put here, right? On the SPX, and what they don't tell you is what were the strikes. Doesn't look like. Oh, here we go. 68.45 was the strikes. 68.45. So one of them, price was 1.25. The debit was $125.90. Right. Also sold 68.45, which that's weird. They're both same strike. A put. Sold 115, and then there was a credit.
I
So
think
debit
that's.
means they took
Uh,
money away. Credit
and
means they
that's
gave you money.
that's sorry. I did not say correct. This is not the type of statement I see. It's slightly different. If you go to the statements again, and if you open it, maybe you'll see
Y-
there are like a lot more columns here in this one.
Yours
Account
doesn't look
type.
like this, you're saying?
No,
Okay, this is where I'm at.
here they show commission, transaction fees, additional fees, and price, and all those.
On this statement or on someplace else?
Yeah, on this statement only. After the trade is over, next day they send you the confirmation statement,
Okay,
and in that.
I think the one I just opened showed that too. I just didn't, I think it showed that. I just was on a different page. Hold on, I think it showed that first page and then it showed some fees on the next page. Now we already know that there is no way around the fees that they have you pay, that they pay, right? There's no way around all that.
I think,
Okay,
Coach,
so these
this
are
is
all
the
the
monthly statement. If you do one of the daily ones, it will show all the fees and the PDT and everything.
Yeah,
okay.
the daily statement. Right.
This isn't a daily one? No, this is something different.
This
Yeah,
is from
this.
December 1 through 31st. So that
Ah,
was the
okay,
last
okay.
one.
Okay, so I'm gonna close it. Okay. Mm, mm, Okay, I'm gonna go back then because y'all seem to know where you're going, even though I don't. Okay, so where are we going for daily? Like the
Uh,
activity?
Same place, except the one that you clicked was the top one, was I think the monthly ones. The one
Mm-hmm.
right underneath are all the
Mm-hmm.
daily ones.
Okay. Okay, let's go there then. Okay, the day. Oh yeah, I see there. It does look different.
Yeah, I mean, there are too many columns, so it's a bit difficult to understand what's going on this.
Mm, 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 mm. I mean, all you really can see is that they're telling you that there's a fee here, 69 cents, and then this is the net amount, another fee, and this is the net amount. I don't, what, I mean, I'm not sure what you want me to tell you.
So we should go by the numbers here at the bottom. That is minus 367.6 in this, and just take the difference, and whatever comes out, that's the profit or loss.
That's the way I've been doing it. So what I do honestly every day, I don't look at this statement because I'm not gonna get caught there. What I do is on every morning, where it says here total value, where every day when I go open up my account every morning, I look at this total value number.
That number also keeps on varying most of all the day. Means
Well,
from evening night
it's gonna
to
sit still. You don't have, if you like right now, you should have nothing open in that account because unless you're trading it yourself, I don't have anything open. So my number is not changing because I have not, there's no account, there's no trade in there at all. So this number sits still. Now on the nights when I have like a couple nights we had a 1 DTE going, of course it's gonna fluctuate because there's a trade open. But like today, there's nothing open. So this 360, these 3668's been the same way since yesterday morning because there's no trade open. So this sits here, this and these two things should agree. These two numbers should be equal because the option buying power has to do with the total value of the account. The stock buying power, this is your margin. This is basically your margin money.
I see.
Okay, that's why that's so much bigger because this is where they're giving you margin money and you can buy stocks with it. We're not doing that. These two things should be equal, but every morning I record this number right here, this total value. That's what I record in our spreadsheet because this you can look at this. I mean, we could look at the fees, but it ain't looking at it is this is my own thoughts. Looking at it is not gonna make it be any less. They're
No, no,
not gonna be less because I'm looking at it.
no, I'm not worried about the fees. I just want to know how I should understand the gain or losses that I have
Yeah,
from day to day.
I'm using this as my gauge.
Okay.
Yep. I keep track of this right here, 366,871 every day. And when I'm keeping track of the trades, and then I'm keeping track of that amount of money at the top, and that lets me know that my account is going up or down. It should be I know based on the trades I'm taking that it should be going up. And the day, if I take a loss, like the day we took a $30 loss last Friday, the money went down 30 something dollars last Friday. So, and then when on Friday, this past Friday, we made $50. My account went up $52.
Okay. So I should take a look at the statement only in the mornings to
I
get
don't
the
even look
correct
at the
number.
statement in the morning. I just look at this thing right here. And
Yes,
you can
that
see
number.
this number. I look at this number. I don't look at the statement, just this number right here. And you can see this on if you're looking on your phone, this total value or option buying power is this top number on your phone.
Okay. So I just focus on that and that's it. I don't
I
have
think
to
that to me
think.
is the least amount of stress for me. Sandra said she had to call an explanation for and add the fees. It's in the footer of the page. So if you read the footer of the page there, Audra said I exported the gain loss CSV, and the gain loss columns give you the profit and loss minus fees. Yes. Thank you, Arlissa. Be blessed. Thank you. Okay, so that's what I do. Every day I write this down. I gave y'all that you saw it in the telegram. I'm thinking that I gave you that spreadsheet that I'm keeping track of. That's where I'm keeping track of the trades and keeping track of the profit and loss every day.
Okay. Okay.
Okay.
Thank you.
Yep, you're welcome. Okay. Was there any more questions? All righty. We have done good. We ended up doing about 3 hours, a little bit more than 3 hours here. I think we covered a lot of good territory. I've got a question. Do you all feel like you're more empowered do you feel more empowered to trade SPX based on the stuff we went through today? Do you feel like you feel more confident, more comfortable to trade SPX, or you got some stuff that we're talking about? What do y'all think? I see a couple yeses. TJ says yes, ma'am. So sweet. Pastor Will, yes. In my sim for sure. Yeah, definitely yes. After today's session, good. This session was helpful, particularly the charting session. Yep. Yeah, Shakila, good. That was very good summary of all the things you taught us last year. I do, but I need to revisit the video. Yeah, Chris, you still got a few ways to go because I know selling is new to you, so you got to grab hold of some of the selling strategies. Good info. Hey, Elaine. Yes. I'll make sure that the video gets uploaded and I'll give you all the links so you can revisit it. And you can take, of course, play some and then pause and do all that. Is that Deborah? Deborah says I got practice in my sim and revisit this video. Picking the strikes is connecting for me. Oh, good. Yes. Okay.
I saw your trade review too, Coach, and I know you kind of went over it today as well. Those same, same day, same trade, but I can't wait to see one where you stack because I saw you had a trading day this week where I think you made like $800-ish or something like that, and you were just stacking them in the same direction. So I'm waiting for that trade review where we could stack them. We could stack them. You know what I mean? Yes.
Yeah. That's something I did on Friday even. I stacked them. I did like 50, 6,800, like 58.95, no, 57.95. No, sorry, 67.95, 6,800. That was one. And then I did 68.05, 68.10, and then I did 15.20. So I was stacking,
Yes.
two contracts going up. Because you some of us are a little closer, so you got a little more risk, but you're further away. So that's less risk, but you still gotta be mindful. But you don't want to, there's way to pull in a few more dollars, but you're
That's what I'm
putting
trying to do. I'm trying to
you
pull in a
put
few
money
more
out there.
dollars.
That's
Yes.
right. It helps to be reminded that time decay would help my PDT hat get filled. Some days I get nervous. Definitely time decay, especially if price is not moving. If price is just kind of sitting still and dancing, then time decay is all you got. Right. So if price is moving in your direction, then price and time are working. But if price is sitting still or dancing back and forth, then all you got is time. And that sometimes can be hard because you want it to close, but time decay has to be the only thing. Like last, I think it was last Monday or Tuesday, might have been Tuesday. That's all you have was time decay. So you just basically just letting the time pass, like hello. Hello. All righty, everybody. I'm going to get off here and try to go on to bed so I can be up early in the morning. A great way to start the year. Thanks for the breakdown. Absolutely. We're going to start the year off. Tomorrow is we're doing this prayer and fasting at our church. I do want you all to do two things. I want you to definitely always be prayerful. Be mindful that for 2026 we are to be vessels. We are to be vessels to be used in the hands of the one who provides these resources. Okay, we are to be used. If the Lord cannot use you to put money through you to advance the kingdom, then he has no reason to give it to you. If you cannot be trusted to pass the resources to the places where he needs it to go, if you can't be trusted as his hands extended, he don't need you. Do you feel me? If you were going away and you said, while I'm gone, I'm going to send you money every month. I want you to make sure that my children eat. And when you sent the money back, the person you sent it to did not make sure your children ate. You're not going to keep sending money to them to make sure your children eat. Does that make sense? That's a worldly example, but let's translate it to spiritual practices. If you left town and said, I'm sending money to you every month to make sure that my daughter eats, and if you sent the money and the person never gave it to your daughter to eat, would you keep sending money? No, you would not. You'd find somebody else to give the money to make sure that your daughter ate. We are the place that he sends the money to so that we can make sure his daughter eats. Okay, if you can't be trusted to pass the money to his daughter, he don't need to use you. Now, he says enough for you to eat some and for you to give to his daughter to eat. He's not saying you got to give it all to his children or all to his daughter, but do what he asks you to do with it. And if you can't be trusted to bless those around you or to continue to move the kingdom forward, he don't need you. Okay, this is a tool, it's a skill. We're being used to help grow our resources to bless those around us. 2026 is the year we lift all the boats. We don't just lift ourselves, we lift each other. Those around you ought to feel it. Okay, if there's nothing more than an extra tip on the table of the girl who serves you at the restaurant. All right. It don't necessarily have to be in the offering bucket, but it should be. If you go to church, make sure that you tithe. Okay. Give God back what's his. But tip the person who washes your car, tip the person who serves you at the restaurant, take care of the person that you pass on the street corner that's out there with one or two babies in the cold. Make sure that you buy some coats and jackets and toys or food for those. Could be a resource. You be the answer to the help that's around you. You be the answer. Being instead of, I'll pray for you, pray and help. Pray and help. Okay, that's one thing. Second thing is this year, we're also increasing our fitness because trading is a very sedentary thing. We got to get ourselves mobile. I'm talking to me too. We got to get mobile. We have to have something in our lives that keeps us mobile because this is a very sedentary skill. We sit a lot. So we got to put walking into weightlifting, whether we standing around. I had to move my little shaky plate under my desk because while I'm sitting here so often, I can put my feet on my shake plate. So that way it's still shaking the lower parts of my body to make sure that my lymphatic system is still processing and still moving the blood back and forth through my system while I'm sitting here. Okay, so we got to put fitness. When we leave the screen, we got to go for a walk. We got to lift some weights, or whatever, find ourselves to a gym. That's also 2026 for us. We're going to grow this money, okay, period. The Lord promised me that we're going to grow this money. Okay, but we got some things we got to do with it because if you can't be used, then he won't use you. That's the first thing. We're going to be used this year. If you can be used, we sing the song, if you can use anything, Lord, you can use me. Can he use you? Can he use you? Make sure that you can be used. Okay? Make sure you can be used, first of all. And we got to be in good shape because the Lord told me very clearly, what we do here is hard on the body. We're sitting still, we're sitting a lot, but it's hard on the nervous system. So our brains have to be sharp because we're making lots of decisions, but emotionally this is tough. Your body takes a lot of hits. When you're winning, your body's taking a hit. When you're losing, your body's taking a hit. When you're deciding, you're taking hits, and your nervous system is taking a hit all day long. So we have to be strong internally. And part of our strength comes from our fitness. We have to be fit. We need to be fit for the master's use. We have to be fit. Okay, we got to be fit. All right. I know for me, I am an emotional eater. I can't eat but so much, but what I can eat, it can be junk, right? I can eat chips, and that's because you're nervous. I'm nervous, eat chips. That's not healthy. I need to nervous eat carrots. Nervous eat an apple. Eat nervous drink some water. Do that, right? But okay, so physical fitness and be able to be used, and we got to be physically fit because our brains have to be strong. And the only way our brains and minds are going to be strong is if our bodies are strong. And I'm not saying you got to go lift heavy weights unless that's what you really want to do, but we gotta, our bodies, our hearts and stuff have to be strong. Those are two areas I want us to make sure that we're fit in 2026. Let's get fit in 2026. Okay. Those are the two things the Lord wanted me to share with us, that there's no reason for him to use you if he can't use you. He don't have to send it to you if he can't get it through you. All right. And we got to be fit. Risk management is our focus this year. Sizing is important. We're not going to oversize. And when we hit our stop losses, we got to go. We've got to go. We cannot sit around for max loss. We cannot sit around for max loss. It takes too much for us to get our money back. Okay. And when I say we, I mean me too. I mean me too. Okay, it's us. We in this together. Y'all know we in this together. When y'all trade, I trade. When I trade, we trade. Just like that. We together. All right. All righty. Okay, everybody. I will see y'all in the morning. Y'all know I always pray for y'all, and I would ask that you continue to pray for me because y'all already know the person out front get hit with the most darts. All right. I'm gonna lead us as best I can and thank the Lord for thank the Lord for it. All righty, pass the word to your friends. If you're not copy trading, consider copy trading. We up about 13 or 14% and still growing. We're going to continue to be consistent with that. Tell your other friends, tell people about it. Y'all come on. If you want to do it, y'all come on. Blessing to everybody. All righty. I'm getting ready. I didn't mention this, but if you're paying by the month and you want to pay for the year, I'm offering the yearly payment of $9.97 for the year. You can pay 1 year for $9.97. It's really a deal because some people are paying $147 a month, and $147 a month for a year would be $1,400. But because I can't differentiate between those who are on 97 and those who are on 147, I'm just going to do one year. You can pay $9.97 and it'll cover 1 year of the membership, and that'll get some of y'all out of the monthly payments. That's, look for that. I think it's ready now. My VA, I think, has it all set up, and you can pay $9.97 and be done paying for a year. That'll stop the monthly payments. It'll just be one payment for the year. That's going to save a bunch of y'all some money, especially if you're paying 147. Okay. Just think about it, and you can go ahead and do that if you'd like. All right. I think that's everything. I will see y'all in the morning. I'm going to have this link ready soon enough. All righty. I'll see y'all tomorrow. All right. Bye, everybody. Bye. See y'all in the morning. Good night.